much of a net reduction will there be when you consider the normal kind of attrition that associated with a workforce the size of the federal government as well. So we're at this point now where these headlines are serious. The pronouncement, those are very determined to do what they're doing, and President Trump says he's supporting them, but we just don't yet have the full picture on where this will end in terms of the scale of the spending cuts and the job cuts and how the markets will respond.
Enda, thanks so much for joining us. Always appreciate it. Enda Kern, global economy reporter, Bloomberg News, joining us from Washington, D.C. via Zoom. This is the big take story of the day. Great stuff. Liz Koppel-McCormick also co-authoring that. You can read more of this story on the Bloomberg and at Bloomberg.com/big take. All right, new for our Bloomberg.com subscribers, get the Going Private newsletter. It's delivered to your inbox Wednesdays and Fridays, bringing you coverage of private markets and the forces moving capital away from the public eye. Subscribe to the Going Private newsletter now at Bloomberg.com/going private. Looking at these markets, the red on the screen weighing on it, we have the S&P 500 off 50 points. That is 0.8%. The Nasdaq's off a solid 300 points. That's 1.6%. The VIX blowing out to just above 20 right here. Looking at yields coming in sharply. The 10-year Treasury yield is coming in 10 basis points. We've got the 10-year now at 4.3%. So that is a noticeable move here. WTI crude oil is off 2.5%. Just below $69 per barrel. Gold lower as well, now just under $2,900 per ounce. Bitcoin 87,000 off 7%. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Our Interactive Broker Studio, we are live at our, I didn't turn the mic on, that's what happened right there, oopsie. I'm Alex Steele, Paul Sweeney, this is Bloomberg Intelligence Radio. We are broadcasting to you live from Interactive Broker Studio right here in Midtown Manhattan. All right, Bank of America CEO Brian Moynihan sitting down earlier with Bloomberg host and Carlyle co-founder and co-chairman David Rubenstein at the Economic Club in Washington. Among the topics was banking regulation, and this portion of the conversation began with Moynihan talking about how he's preparing for the current Trump administration.
If we geared ourselves up for this president, not that president, we'd have to change 45 times or whatever it is. And if you think even of in the foreign soil, think how many different prime ministers there's been in England, or so even in my tenure as CEO. So at the end of the day, you run the company the right way. And what we're trying to say is get us to a rational regulatory structure and have it stick to the ribs. If you keep swinging like this, our clients can't depend on us when they need us.
So before the Great Recession, there were a number of large banks in the United States and Europe and Asia. And now it seems as if post the Great Recession and post-COVID, the United States is dominating the global banking world. What happened to the European banks? They're not really competing with you and JP Morgan and Wells Fargo as much as they used to. What happened? What are the American banks doing that enabled them to become so dominant in the banking world?
The American banking system is probably a story as much of American capitalism being successful, because in the days, the banks represent the size, scale, and scope and the vibrancy of that economy. So what happened from pre-financial crisis to now is, at that time, you and I have been sitting here talking about how China's economy was going to be bigger than the United States by now. The European economy was as big and was going to outgrow the United States under the enthusiasm for the EU framework. And guess what? We're 1.5, 1.75 times the size of the economy back then. Europe's like 1.1 or whatever it is. So we've outgrown them. That's part of the vibrancy and, frankly, dealing with the financial crisis, recapitalizing industries, failing a bunch of industry participants, bringing people into the tent, the right regulations, and then going forward. And so what's happened is Europe is not kind of crawled out economically. Therefore, their banking system has been hamstrung at the same time.
Now, you've been the CEO for 15 years, and the bank has recovered from a lot of problems it had when you took over. You've had a great career. Suppose the President of the United States said next year, I need a new chairman of the Federal Reserve Board, and you've been running Bank of America. Why don't you come in and be chairman of the Federal Reserve Board? Your response would be?
I think I'd say talk to David Rubenstein.
No, I don't think so. I'm sorry. So
our company, look, in the end of the day, I get up every morning and I've got teammates out here in the audience, and this team is unbelievable. And if you see what we do for a customer, and my emails in the public domain, and customers send me when we're doing great things for them, and when we're not doing great things for them, come directly to me. Nobody reads them but me. And so if you see what we can do for a company, for individual, you see the enthusiasm for a young kid who's opened an account, enthusiasm for the 4,000 or 5,000 kids we hire between 18 and 22 that come into our company every year, the communities that we support, that just is a great job, and I love doing it as long as I'm healthy, as long as I have the energy, and as long as the team and the board support me, I'm good.
So recently, another banker you probably heard of, Jamie Dimon, and he testified on Capitol Hill that maybe the regulators and Congress should get together and say, let's just start afresh and take a look at all the banking regulations from a fresh perspective, building from scratch. Do you have a comment on that? Is that a good idea? Or?
Well, I think the spaghetti chart of overlap is the question. So you just take the Consumer Bureau. In 2010, with Dodd-Frank, 10 or 11, they set up the Consumer Bureau. The theory was that all the consumer regulatory activity would move to a new agency. Guess what? We still have the OCC regulates consumer activity, still have the Fed regulates consumer activity, still have the FTC will hit consumer activity on occasion, and you have the Consumer Bureau, and if you have the FDIC as a regulator, you have the FDIC. So none of that happens, so you end up with another added regulator. Much like after 9/11, HHS came in and was supposed to sweep everything in, and it didn't quite happen that way. So I think you could start with a fresh sheet of paper, recognizing that in the National Banking Act in the 1800s, or whether the Federal Reserve Act or the FDIC Act in the 30s, the world has changed a lot since then. And so the idea of national regulatory consolidation, even on a dynamic country like the United States, is probably more appropriate today than it was when you had 10, 15,000 banks all distributed all over. And Tom Barkin's coming from the Richmond Fed. Tom is terrific. But there was a day when everything went on in Richmond, and the Richmond Fed catchment basin was only there. That day is way past.
You're regulated by the Federal Reserve, the FDIC, the Comptroller of the Currency, and anybody else?
The Consumer Bureau, the SEC, the CFTC. Put it this way, there's 100+ regulators in our building every day.
So do you spend a lot of time with the regulators, or you try to avoid that?
I'd like to spend time when they're telling us we're doing good stuff. But no, we all spend a lot of time, and I have a great chief risk officer, and Jeff Greener, who organizes that for the company. All my senior executives spend time with them. And look, the day-to-day regulators are trying to help us be better.
All right, that was Bank of America CEO Brian Moynihan with Bloomberg host and Carlyle co-founder and co-chairman David Rubenstein. They were at the Economic Club, Washington, D.C. for a wide-ranging discussion. Good to hear from Mr. Moynihan. Quick market check before we jump here. The S&P 500 off 39 points at 0.6%. The NASDAQ off about 242 points. That is about 1.25%. That does it for Alex Steele and myself. We will be back tomorrow. Balance of Power with Joe Matthew from Washington, D.C. That is next after this global news update. Have a good Tuesday. This is Bloomberg.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. Elon Musk has renewed his vow to fire federal workers who ignore his email demanding a show of what they do. CBS's Allison Keyes says some of the people tasked to Musk are revolting.
21 staffers at Doge wrote a joint resignation letter saying they swore to serve the American people and uphold their oath to the Constitution across presidential administrations. But they say it is clear that they can no longer honor those commitments. The former staffers also warned that many enlisted by Trump advisor Musk are political ideologues who don't have the necessary skills or experience for the job ahead of them.
Pushback to the ouster of federal workers has reached local town halls. Missouri Republican Mark Alford faced a crowd and insisted, quote, God has a plan for those who lost their jobs.
Elon Musk has contracts with the federal government. But he is also, I think, doing an effective job.
The margin for success is slim, and some House Republicans have suggested they would vote against a GOP budget proposal that Speaker Mike Johnson vows to bring up for a vote today.
There's always more work to do right up to the end for a big vote like this, and this is a big one. We're very, very close.
Apple shareholders today turned back an attempt to eliminate corporate diversity programs at the company. Overseas, the Vatican says Pope Francis had some meetings in his hospital room as doctors report some improvement in his condition. CBS's Seth Doan.
Today, they started the process toward beatification, toward sainthood of, I believe, about 5 different people. So the church is trying to show Francis may be in the hospital, but we're still at work.
Francis is still in critical condition with double pneumonia. Well, for the 10th time, a Blue Origin rocket has taken tourists into space. Pilot and entrepreneur Elaine Hyde was one of 6 people on today's successful flights.
I thought I knew what home was. But when I was floating up there, and you see it right there, it's like you're home, and you get this new definition of what that means.
A private report finds consumer confidence dropped sharply this month, posting the biggest decline in 4 years. CBS's Kelly O'Grady.
Consumers aren't feeling great about where the economy is going. Particularly, I was reading through the release. They think inflation is going to be 6%. We're at 3% right now, 6% in a year.
A Missouri woman charged with trying to defraud Elvis Presley's family by allegedly moving to auction off Graceland has changed her plea to guilty. Wall Street, the Dow is down 23 points. This is CBS News. There's follow-up to a much-talked-about photo op.
Not everyone was amused when Elon Musk brought his 4-year-old son to the Oval Office.
This is X, and he's a great guy, high IQ.
President Trump introduced the little boy to reporters before X began fidgeting and taunting the commander-in-chief, even wiping his nose on the Resolute desk.
Well, if you don't have a feedback loop, X.
Now his mom, Canadian musician Grimes, is pleading with her estranged ex, the head of Doge, to keep their children out of the spotlight. In an interview with Time, she says fame is something you should be able to consent to. Deborah Rodriguez, CBS News.
For the last month, astronomers have been keeping tabs on a large asteroid they said could hit the Earth in late 2032. But now NASA says it's no longer a danger, with the probability of a hit cut to near zero. Last week, the odds were more than 3%. Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
All right, so maybe there won't be a vote. Welcome to the fastest show in politics as the Speaker of the House casts fresh doubts on whether the Republican conference can actually pass a budget resolution by the end of today. We're going to get the latest on a fast-moving story from Jonathan Tamari at Bloomberg Government. He'll join us live from Capitol Hill. Elon Musk drops a second ultimatum, giving federal workers, hundreds of thousands of them, until midnight to justify their jobs. But federal agencies are telling them to ignore Musk's emails, and we'll try to make sense of the Doge with Nathan Dean at Bloomberg Intelligence. He's also watching crypto fall out of bed today. We'll find out why and what the clients are asking. Is the Doge becoming a liability for Trump? We'll continue that conversation with our signature political panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us for the hour. And it's all after a look at Wall Street. Let's start right there, right now, as always, with Charlie Pellet in New York. Hey, Charlie.
Hello there, Joe Matthew. Lots going on today. Want to begin with crypto because you mentioned what's going on with Bitcoin. Down now by 7.2%, 87,187, all part of a broader risk-off selling spree today with the Dow, the S&P, NASDAQ very much in the red. Right to the numbers here. Stocks getting clobbered. 59.41 where we stand on the S&P, down 42, a drop there of 0.7%. The Dow down 38, down less than 0.1%. NASDAQ down 1.3%, down 260 points. The NASDAQ 100 index down 1.2%. Bonds surging right now. The yield on the 10-year 4.30%. The 2-year 4.09%. Spot gold down $55 the ounce, $28.95, down 1.9%. West Texas intermediate crude, $68.88 a barrel on WTI, down 2.6%, and Bitcoin just above $87,000, worth repeating, down now by 7.3%. As for tariffs and markets, Thomas Kennedy is Chief Investment Strategist for Global Wealth Management at J.P. Morgan Securities, and he was interviewed this morning on Bloomberg Surveillance.
When you look at 2018 and 2019, the market's reaction to tariff announcements, the S&P 500 was moving 2.5% on those announcements. Now you're talking about tariffs that are substantially bigger, and the market's moving 50 basis points, 30 basis points. So I think the market is doing a better job this go-around in this Trump administration than in the first one of finding that noise and saying, I'm not so worried about that.
Thomas Kennedy of J.P. Morgan Securities. So tariffs, one concern today, but also a disappointing reading on the consumer that is fueling concern about the health of the U.S. economy. The Bloomberg Mag 7 Index, an equal-weighted gauge that consists of Apple, NVIDIA, Microsoft, Alphabet, Amazon, Meta Platforms, and Tesla, now down 10% from a December high, passing the threshold that meets the definition of correction. Again, recapping stocks lower, S&P down 43 right now, down 0.7%. Balance of Power continues right now. Back, we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you so much. Watching Wall Street for us here on the fastest show in politics. Welcome to the Tuesday edition. The most common conversation I've been exposed to since leaving the house this morning. It's only Tuesday. Yes, indeed. Here on Bloomberg Radio, on the satellite channel 121, and on YouTube, where you can find us by searching Bloomberg Business News Live. It's the coolest thing going, by the way. You can hear these shows and see them in a lot of different forms. Getting on YouTube is pretty cool. You can even back things up if you want to hear the beginning of the conversation. So here we are on Tuesday. Yes, this was supposed to be business day, right? The big vote. We talked about it. We've been winding up for not weeks, but months to a budget resolution. A thin Republican majority be damned. The vote set for this evening is what we were told by the Speaker of the House, who was up late. Reporters huddled outside the Speaker's office until late last evening as he was talking with the fence sitters, those who hadn't made up their mind, the undecideds. One of them we talked to yesterday, right here on Balance of Power, Nicole Malliotakis, the Republican from New York, went from a leans no to a leans yes in just that spot of time. But there are still holdouts. Speaker Mike Johnson says it is a moral obligation to get this done. Spending cuts, tax cuts. He held a briefing this morning following his late night and early morning. Here's what he said.
We do not have time to waste. The American people are expecting us to deliver on this, and we will. And House Republicans need to unite so we can keep this process moving forward, and I think they all understand that. We're working right now to get everybody on board. I think everybody wants to be on this train and not in front of it.
But then the reporters started asking questions. This is a briefing that took place just a short time ago. Are you committed to the vote being today? He was asked. Johnson, quote, there may be a vote tonight. There may not be. Stay tuned. 11:03 a.m. Washington time on the terminal. The headline, Johnson says budget vote may not occur Tuesday. So maybe not so much. That's where we start our conversation with Jonathan Tamari, trying to herd the cats for us on Capitol Hill. Bloomberg government senior Congress reporter. Jonathan, it's great to have you here. I don't know from 1 minute to the next how we tell what's going on, but we understand there are at least 3 no's. Thomas Massie, Tim Burchett, Victoria Spartz. Is that still the case now? Because this couldn't pass without them, right?
Yeah, at the last moment of checking, yes, those 3 were all holdouts. There may be others who are just not as public with it, but it's a fluid situation. It could change within the next few minutes. It could change even among those 3. Victoria Spartz is someone who has often said she was voting against priorities and then in the end ended up voting for them. So it's really fluid. Speaker Johnson is working on it. He has in the past, gone into these votes and looked like he was in a big jam and ultimately found his way out of it. But this is a really big lift. The margins are smaller than ever. It's not clear, as he made clear this morning, that they're going to be able to get it done at least today. We'll see.
Margins are so thin, Jonathan, that Elise Stefanik apparently is going to have to wait weeks, if not months, to go represent the nation as ambassador to the UN. They have shelved her nomination, or at least the vote on her nomination, because they can't lose a single vote. Is this still a matter of Medicaid cuts? Or is there more to it than this when we consider the no votes at this moment?
Well, there's 2 sides to it. So the more Republicans from more moderate districts are concerned that there are going to be Medicaid cuts. Now, Speaker Johnson says, hey, this bill is a resolution. It's an outline. It does not have specific cuts in it. But the thinking is that the level of cuts they're talking about, there's no way you could get there without having some trims to Medicaid. The other side is the hardliners, people like Massey. They want more cuts. They want it to go beyond where it already is. So you've got a couple of problems there, and he's being squeezed from both ends. If you give in a little to one group, you're only going to increase the fears of the other group, and that's been the challenge throughout this Congress and the last Congress for House Republicans.
Isn't that the truth? So he's getting pinched on both ends here. You talk about the Masseys and Burchetts of the world, Jonathan Tamari. He's about to ask them, unless something magical happens here in the next couple of weeks, next couple of days, he's going to have to ask them to sign off on a continuing resolution, or the government's going to shut down in 17 days. That's another big ask coming from the same speaker.
It is another big ask, and that's one where they're trying to put pressure on Democrats to help support that bill because they know that there are a number of Republicans who just won't support a continuing resolution on principle. They never vote for them. The Democrats are saying, hey, you guys have the majority. You've got the White House. Trump and Elon Musk are running things. You fund the government. We're not responsible for it. We're the minority party. So that's another big collision course. So a couple of big things coming down here in the next 2 to 3 weeks.
You know, he was asked about a possible shutdown as well. And, you know, look, we're not saying that's going to happen. Speaker said he hopes Democrats will back off their, quote, outrageous demands, unquote. Jonathan, what's he talking about?
So Democrats are looking at what Trump and Musk are doing, and they're cutting funding to things that Congress has authorized. And they're saying, well, look, we're not going to vote for a funding bill unless you give us assurances that these things will actually be funded, that we don't vote for it, and then Trump turns around and says, no, I don't like that. We're not spending our money on that. So Democrats want those assurances. Republicans are saying we're not going to tie the hands of the president by passing any kind of law that's binding on spending. And that's where the impasse is. And Republicans are betting that Democrats will take the blame for a shutdown. Democrats are saying, hey, Republicans, you're in the majority. You're going to get the blame. I think a big question here is, Democrats believe in government. Would they really stand by and let the government shut down in a few weeks? I think that's going to be a big test for Hakeem Jeffries and his Democratic caucus.
Well, I'll tell you, we're starting to get the predictions here on this very program that's starting to look like a shutdown may well happen this time around, having been saved repeatedly over the past couple of years with some last-minute maneuvers. Jonathan Tamari, your headline on the column today at Bloomberg Government, it's prove it time for the House. Is there going to be a vote today or not?
I don't know. That's the honest answer. I'll tell you, the speaker doesn't know. So if he doesn't know, I really don't know. But this is, we've seen the House says, hey, we have the best way to get Trump's full agenda passed. And what the point of my column is that, okay, that might be the case, but you've got to actually start moving it to show that that's the case, because the Senate has moved a smaller and admittedly easier piece of it. They've moved the border security piece a step ahead. And that is simpler for Republicans because the tax issue is much more complicated. But they're saying, hey, we have made progress. Let's see if your theory of the case works. And we're about to see if it does or doesn't in these next few days, if not tonight.
So is Lindsey Graham having a good chuckle right now or what?
Well, they're trying not to gloat too much, but, the Senate, they like to play big brother to the House sometimes, I think. And so I think maybe more in private than in public. They're not going to, they like Speaker Johnson, but they think their approach is the more efficient one. And I think the subtext of the Senate moving their own plan is not believing that the House can really get itself together.
No, of course they don't. Look, this is going to be a big day here, obviously, for Mike Johnson, reminding our viewers and listeners he cannot afford to lose more than one Republican here, one Republican no vote. Is he just in meetings all day then? It's going to be a game day call as soon as he thinks he's got the votes, we go to the floor?
That is what it looks like. And, when you say he can't lose more than one, Massey has said he's a no, and he is a person who's pretty firm. He was the one person who voted against Johnson for Speaker. Remember, a lot of other people were wishy-washy, but they eventually came around. Massey stuck to it. So it seems like he's a hard no. And the question is, do any of these other people come around? There is a long history of Republicans raising concerns and eventually falling in line. And we'll see if President Trump gets involved, because that's the ultimate hammer here. But we'll be watching to see whether he or Johnson can get it done.
Let us know when the Trump calls start coming in, Jonathan, because you're right. That'll probably be where this thing turns. Jonathan Tamari doing great work on Capitol Hill for us, Bloomberg Government Senior Congress reporter. He's going to have some likely long days ahead here as we try to figure this out. So that's where we are. The most refreshing answer you can possibly hear. I don't know what's going to happen with the vote later on, and when we find out, we'll let you know, of course, here on Bloomberg. I'm Joe Matthew in Washington. We'll bring in Bloomberg Intelligence Senior Policy Analyst Nathan Dean coming up next on the fastest show in politics.
It's 12:20 on Wall Street. We do check markets all day long here at Bloomberg. We have got losses for the Dow, the S&P, and NASDAQ. And right now we begin with the NASDAQ Composite Index, a major tech sell-off. NASDAQ down 1.5%, down 291 points. Stocks are getting clobbered, bonds surging. There's another disappointing reading this morning on the U.S. consumer. Fuels concern about the health of the U.S. economy. Right now, NASDAQ, as I mentioned, down 1.5%. The S&P, to keep it all in context, down 0.8%, down 46. We've got the Dow down 61 now, a decline of 0.1%. The 10-year at 4.30%, with the 2-year 4.08%. Gold down $54 the ounce, 28.97. The precious metal 1.8%. West Texas Intermediate crude down 2.8%. WTI below $69 a barrel now, 68.72. Bitcoin, a major sell-off there today. Bitcoin plunging by 7.6%, now with an $86,000 handle. Bitcoin at 86,813. Earnings news. Home improvement retailer Home Depot expects a key sales metric to return to growth this year, though the retailer is cautioning housing demand won't change significantly in the near term. Home Depot shares up today on a down day for the rest of the market. HD up now by 3.9%, and rival Lowe's reports tomorrow. The Lowe's shares up now by 2.4%. Again, recapping, the Dow, the S&P, NASDAQ all in the red. The S&P down by 0.9%. Bitcoin bears repeating, down now by 7.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington once again. Your host. Lots going on. Here he is, Joe Matthew.
Always. When isn't there a lot going on? Charlie Pellet, thank you so much. How about that? Bitcoin back below $87,000 here. With crypto falling out of bed, there's only one man to call. With the threat of a government shutdown, same guy, you want to make that call. When banking regulations are on the move, and we hear from a newsmaker like we did today, Brian Moynihan, Bank of America, there's one guy to call. His name is Nathan Dean. He's up next. As we consider this conversation we heard, Moynihan, Bank of America, David Rubenstein, and the idea of adjusting to politics as they change below our feet, here's what he said.
If we geared ourselves up for this president, not that president, we'd have to change 45 times or whatever it is. And if you think even of in the foreign soil, think how many different prime ministers there's been in England, or so even in my tenure as CEO. So at the end of the day, you run the company the right way. And what we're trying to say is get us to a rational regulatory structure and have it stick to the ribs. If you keep swinging like this, our clients can't depend on us when they need us.
So who are you going to call? He's with me right now, Bloomberg Intelligence Senior U.S. Policy Analyst. Not Ghostbusters, Nathan Dean. Great to see you, sir. How are you?
Great. Thanks for having me.
So we're going to go through all of this stuff. Let's start with Moynihan. Really interesting to hear him talk about the pendulum and reminding us that this bank has been around since George Washington. What does Trump mean for a titan of finance like this?
Well, I think what Brian Moynihan was referring to is this idea of more capital, but less capital. I mean, Dodd-Frank's been around since 2010, and they've spent the last 15 years implementing it. It's only about 75% implemented, but the big stuff is there.
Yep.
And if you get to this idea where a Democratic president comes in and all of a sudden bank capital goes up dramatically, Republican president comes in, bank capital goes down, it's very hard for banks to prepare for the long term. Mm-hmm. So for me, when I hear that comment, I think of what bank lobbyists will be pushing the Fed and the OCC to do. And for me, that is almost capital neutral. And so we go back to this idea of the Basel III endgame. And look, there are people in Washington that want to see the Basel III endgame go away. But I also think that there are a lot of folks in New York who want to see a Basel III endgame come in and be capital neutral. So I think what will happen with capital regulations over the next year is you're going to hit pause. The regulators are going to try and figure it out. Maybe Jerome Powell does something at the Fed. Maybe he doesn't. Mm-hmm. Doge is obviously playing a very important picture here. But I think for the long term, I think you're going to see more of a capital neutral policy emerging from the bank regulators over the next few years.
Okay. Now, I'm quoting Ray Parker Jr. Because your phone is ringing and you are the guy to call. What are clients who have terminals and who are investing on this information asking you about this right now?
Well, obviously, crypto is a big piece because of the cryptocurrency news.
Sure.
I mean, we saw that Bitcoin has gone down, Trump coin, Melania coin, a lot.
Are they even asking you about Basel anymore? I mean, this conversation has changed a lot.
Not so much. I mean, the bank regulators, and I think a lot of bank investors have sentiment that deregulation is coming, but they understand now that deregulation is not a magic wand. It's going to take a long time. And so I think from what our clients are talking about is what are the actionable things that are coming out over the next few weeks and months? Obviously, tariffs. President Trump just reiterated today that Canada and Mexico tariffs are coming next week. Yeah. Reciprocal tariffs could come even later. The State of the Union. I mean, there's a lot of things that are coming up. But I think in terms of this week, it's the House reconciliation bill. Will that pass tonight? Will it not?
Will there even be a vote?
Will there even be a vote? And then this idea of tariffs and then crypto. Those are the three things I think our clients are really talking about.
Let's tick through them. Do you think a vote is coming, or does Mike Johnson have more herding of cats to do?
I think there's more herding of cats. I don't think a vote's going to happen tonight. Could be wrong, but Speaker Johnson can only afford to lose one, and there's no deadline here. Correct. I mean, that's the thing, is that he can push this deadline back, and there's no penalty. So what does Washington often do when they do in these situations? They kick the can and they push it down. Now, obviously, the Senate's going to be sitting there. Senator Thune's going to say, look, if you can't get your act together, we have Plan B or Plan A, depending who you talk to in terms of the reconciliation. But we're telling our clients is that this vote is more of just, this vote is just the vote to kick off the process.
You're right.
This isn't the vote that actually has Medicaid cuts, SNAP cuts, tax changes.
So if it's this hard already, that shouldn't really encourage them, should it?
Exactly, which goes to our theory that, we do think tax changes and we do think a reconciliation bill with a multi-trillion-dollar price tag with economic benefits and so forth will pass this year, but we've always said it's going to be in the latter half of the year, potentially even the fourth quarter. So nothing has to happen this week, so don't be surprised if they kick the can. Now, I also think that Speaker Johnson could eventually get a budget resolution through, but it just may not be this one.
Got it. There is a deadline coming, and that's a funding deadline, middle of next month. When do you start running odds on a shutdown, or are you already there?
So we're going to have our odds out next week. Okay. Right now there's a lot of rhetoric, and the rhetoric will increase as we get to March 14th. Sure. That's anticipated. Yeah. Now the question here is Doge, because the Democrats obviously are not thrilled with what's happening with the Doge committee. And my question, though, is how are they going to respond to this in terms of a shutdown? Now, I don't think they can get to a top-line number. I think there's going to be a short-term CR that comes out of this. But my question is, how much fight are the Democrats going to put up on this? Because if the Republicans come back and say, here's a clean bill, can the Democrats come back and say, we're going to block this because of Doge? I'm not exactly sure yet. We're going to be we're going to be having a lot of internal discussions this week, and we'll have our odds out for you next week.
Yeah, but, I can't wait. That says something, by the way, when you get to the point. That's like when a champagne house decides to declare a vintage. When you guys say we're running a countdown clock, that means it's kind of getting real, right? There are so-called shutdown threats you don't do odds on.
Well, I mean, this is a serious opportunity here for a shutdown. And
that's what I mean, though. That's different than the last couple times.
Yeah, absolutely. Whenever sometimes we've had this conversation when I say, hey, don't worry about it. It's not gonna happen, or we really don't care. This is different because we do think that there is going to be a significant shutdown sometime in 2025. I'm just not sure this is the one.
Wow, a significant shutdown. Because you've got the debt ceiling in mind.
We have the debt ceiling coming, and we have political parties that are already thinking about 2026. And when political parties go into shutdowns thinking that they're the ones that are politically advantageous to their positions, that's when you get a shutdown.
What's significant? Weeks?
I think, President Trump had the 31-day shutdown.
Yeah, that was significant.
I had a client ask me this morning, are we going to get a 2-month shutdown?
Wow.
So I guess that's one of the big questions.
Trump would want a record breaking, right? If we're going to do it, we're going to set a record. It's very, very Trumpy.
When it comes to shutdowns in particular, it's always the American people putting pressure on politicians to come to an agreement. Yeah. Whether it's children trying to go to the zoo here in D.C. or national monuments. You may recall a couple years ago, World War II vets stormed the memorial and broke down the barrier. They're the ones that put pressure on Washington to end the shutdown. It's just, where does that pressure go? Does it go to the Democrats or to the Republicans? And we're still trying to figure that out.
Okay, fascinating. You mentioned crypto. What's going on here? Bitcoin falling out of bed, 86,000, and don't even mention, you mentioned some of the meme coins. That's a disaster area depending on the coin you're looking at. What are the influences here when it's risk on, risk off? Is this a hedge or not?
So there's really two aspects to this. Is you have to separate Bitcoin and then the meme coins.
Fair. Start with Bitcoin.
When it comes to Bitcoin, we saw the price go from 100,000 down to around 86. I think Charlie just said.
Yeah.
A lot of this is driven by the macroeconomic environment. We're seeing a lot of, in our earnings calls across Bloomberg Intelligence, a lot of our analysts are reporting back that things aren't looking so rosy in the economic front. And Bitcoin could be another example of that. The tariff policy in particular, whether that increases costs or leads to dramatic job cuts in certain industries, the question here, though, is Bitcoin has always been seen as a risk-saving or at least a risk-aversion asset.
Right. So isn't this the time to buy it? If you're worried about the dollar, if you're worried about the direction of the economy, if you're worried about tariffs, wouldn't you buy Bitcoin?
But that's the thing, is that a lot of this is driven by the global economic order. Bitcoin is not a U.S.-specific coin. It's a global coin. And so I think there's a lot of uncertainty and people just don't know. I mean, Bitcoin's only been around for a couple of years. It doesn't have 50, 70, 100 years of trading like gold does. Right, yeah. And so I think a lot of Bitcoin investors who are also mostly retail in nature are still trying to figure out, how does this work? And, we're just going to have to see how it plays out over the next few weeks.
This is fascinating to me. I'm looking at Melania coin. This would be the opposite of Bitcoin. Now we're into the meme coins. Some would call them other things. I think Patrick McHenry suggested there might be a name you can't use on the air. They're S coins. This thing topped out at like $9. It is worth 94 cents right now, down 88%. What's going on there? Are we giving up on this idea?
Well, meme coins are meme coins. They're speculative coins that people want to get in early, make their dollars, and then get out. And so, the meme coin argument has always been interesting here in the policy space because if you talk to a lot of crypto advocates in Washington and you give them truth serum, they'll probably say that the meme coins are absolutely horrid for this argument. Because, look, when you go to Congress or you go to the Securities and Exchange Commission, you say, we are a serious industry, we want rules and regulations, and then you have a meme coin comes out and says, we're going to take all of our dollars and get all of our gains within the first 3 to 4 days and then watch it go back down to zero. That's an unserious nature to a serious question. So I think when it comes to the meme coins, a lot of people in the crypto world would prefer if they just went away and then you focus on the big five instead.
The Trump family doesn't seem to agree, though.
Well, but
they've been launching coins like they're going out of style, right?
But crypto. I think there was a lot of anticipation that President Trump was going to be inaugurated, and then you were going to get crypto policy. I mean, they had the crypto czar. You had a lot of discussions, and look, you are getting a lot of positive momentum out of the SEC crypto task force. Paul Atkins, when he's confirmed, the CFTC, when Brian contends, if he's confirmed as we anticipate, you're going to have a crypto advocate at the helm of the CFTC. But it takes time. Washington doesn't move that quickly. There's no magic wand. And so when it comes to crypto policy in particular, you have to think about it in terms of 18 months to 2 years, not within the first 100 days, which I think a lot of crypto advocates were thinking of.
So is the big question you get then from crypto investors, when's the regulation, when's the framework?
Yeah, absolutely. I mean, we saw the stablecoin bills come out, the Genius Act and the Stable Act. There was another one from the House Financial Services Committee ranking member Maxine Waters.
What do you tell them about it? Something comprehensive, another fit. When do we actually get some clarity on that this year?
I'd say the earliest would be the end of this year, more likely the beginning of next year.
Fascinating. Then we'll be watching, I guess, these prices in the meantime. If you're listening to Nathan Dean, you just got your deep dive there from the senior U.S. policy analyst at Bloomberg Intelligence. People pay a lot of money for this advice, and it means a lot to us to have you here, as always. With apologies to Ray Parker Jr., Nathan Dean, thank you so much. I'm Joe Matthew in Washington. This is Balance of Power. When do we get the BOP coin? Are you working on that, James? I didn't even ask him about the Doge. It is really, we'll have news for you on that. We'll get a ticker for you later in the broadcast. We'll assemble the panel next. Rick and Jeannie are on the way as we get serious about politics in Washington. Here on Balance of Power, this is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We have now got the Dow Jones Industrial Average higher, up 82 points right now, up 0.2%. But both the S&P and NASDAQ, they remain very much in the red. Stocks getting clobbered, bonds surging as another disappointing reading on the consumer fuels concern about the health of the U.S. economy, which is the world's largest. The S&P down 28, 59.54, a drop right now of 0.5%. NASDAQ is down 215 points, a drop there of 1.1%. But again, the Dow higher by 85 now, up by about 0.2%. 10-year, 4.30%, with the 2-year, 4.09%. Gold down $50 the ounce, $29.01, down 1.7%. West Texas Intermediate crude down 2.6%, $68.89 a barrel. Bitcoin, as we were discussing right here on Balance of Power, Bitcoin plunging by 7%. Bitcoin, 87,293 on Bitcoin. CoreLogic is reporting American home prices heated up in December. And with that story, here's Bloomberg's Vinny Del Giudice.
The number of homes on the U.S. market remains slim in many places, sending prices almost 4% higher from a year earlier. Bidding wars are still breaking out, especially along the coasts. That's even with mortgage rates in the neighborhood of 7%. Among major American cities, New York City kept the top spot, followed by Chicago and Boston. Vinny Del Giudice, Bloomberg Radio.
Shares of the telehealth company Hims & Hers Health are plunging after it said it will soon stop selling some compound weight loss drugs. Hims shares down now by 25.4%. Eli Lilly is ramping up the fight against cheaper copycat versions of Zepbound by lowering prices for a version of its blockbuster obesity drug. Lilly shares, they're up 2.3%. Again, recapping, S&P 500 index down 0.5%. Bitcoin down by 7.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your host, and here he is, Joe Matthew.
All right, Charlie Pellet, thank you, as always, watching Wall Street for us here on Balance of Power. Yeah, we're live in Washington. I'm Joe Matthew. Hour one of the fastest show in politics. As we've touched a couple of important stories so far, waiting for news on whether we're going to see a vote tonight or any time today or in the next couple in the House of Representatives on a massive budget resolution that would pave the way for this reconciliation exercise we've spent so much time talking about, including an extension of the Trump-era tax cuts. Now, with all of that said, we're keeping eyes on a couple of holdouts here. We're also tracking the Doge. There's another ultimatum, another deadline. Midnight tonight is what we are told, 11:59. Another round of emails went out here to all federal workers saying, if you can't justify your job, remember this is the story yesterday, give us 5 bullets. What'd you do last week? Why should you keep your job? The problem is the Office of Personnel Management delivered the news to agency chief human capital officers on a phone call here that they can ignore the emails. Each agency will have to speak, I guess, on behalf of its own workers. And you've got a federal workforce here, once again, on edge, wondering what the heck is going to happen. And so we're starting to hear more fallout, more complaints from actual Republicans when it comes to the Doge. Not the mission of the Department of Government Efficiency, but the actual way that this is all being carried out. Fascinating take in the Washington Post earlier today. Aaron Blake reporting. Moderate Republicans, to be clear, think Lisa Murkowski, John Curtis, Don Bacon, Brian Fitzpatrick, leading the charge here with words such as embarrassing, cruel, absurd, extortion, and trauma, while crying foul over what Donald Trump and Elon Musk are doing to the federal government, the one that jumps off the page. Kevin Hern, Republican from Oklahoma, congressman, told NBC News, remembering they're all coming back from these town halls last week in which many of them were ripped by constituents over this whole thing. He says he plans to urge Elon Musk to show more compassion. The constituents in his district, he says, are not interested in fighting against budget cuts. They seem to agree with that in principle. It's, quote, just they don't like Elon, unquote. Let's assemble our panel for their take. Rick Davis and Jeannie Shanzano back together again today. Bloomberg Politics contributors. He is Republican strategist partner at Stone Court Capital. She is Democratic analyst, senior democracy fellow with the Center for the Study of the Presidency and Congress. Rick and Jeannie, great to see you. I don't know what this means, Rick, when you're hearing from Republicans, the calls coming from inside the House about the current status of the Doge. Has it overreached?
Yeah, there's a lot of confusion with everybody. I mean, you described the most obvious and imminent confusion about, going back and forth since Saturday on whether or not you could lose your job by not answering the 5 bullet points on what you did last week, which is elemental at best, right? It's like, how could anybody invest in some kind of exercise that's so wasteful of the time that we have for our government employees? Two, Elon Musk. I mean, what's his status? Is he in charge of Doge? Is he a special representative for the White House? Is he a government contractor? He's evidently not allowed to make policy directly, and yet seems to be using his platform X to make policy directly, including the President of the United States, referring to this in a very important meeting on Ukraine yesterday with the President of France. I'm confused. I follow this stuff pretty closely. You've got the greatest experts on the face of the earth working at Bloomberg. I think we're all scratching our head going, what the heck is going on? If it isn't incompetence, then it's really confusing to understand what are these employees supposed to do and when are they supposed to do it?
And what are they supposed to believe, Jeannie? What do you think of the words we're seeing used by these Republicans? Embarrassing, cruel, absurd, extortion, trauma. What are Democrats saying?
Well, Democrats are hearing from their constituents as well, who are urging them to go out and to fight back fiercely. And we have heard that over and over again. They want Democrats to stand up. Of course, Democrats are in the minority in Congress, so they are a little restricted at this point. But, the reality here is that Elon Musk is wildly unpopular amongst the American public right now, not because they don't like him or they do like him, but because they didn't elect him. They elected Donald Trump. They elected their members of Congress. And so to add to this confusion is the fact that they did not elect this individual. And also, he is taking billions of dollars from the very government that he is cutting. So let's just look at Bloomberg's great reporting today on the FAA contract. We still don't know how much, at least I don't, how much it's worth. But he has received what will be a massive another FAA contract. At the same time, 400 employees of the FAA were cut. SpaceX is a great organization, but there is an enormous problem as it pertains to conflict of interest here. So I think a lot of what he's doing with these emails and these X's are to distract us from the reality that he is getting billions of dollars, as are his companies, as a result of being Donald Trump's best friend and on the inside of the U.S. government at this point. And it should be an enormous concern to everybody.
Well, it's a concern for some people working for the Doge. This is a pretty big story today from the Associated Press. Rick, more than 20 civil service employees have resigned from the Doge, saying they were refusing to use their technical expertise to, quote, dismantle critical public services. They wrote a joint resignation letter, a copy of which has been obtained by the AP. It has become clear, they say, we can no longer honor those commitments. Are we at the point here where Elon Musk has found the line? It's time to recalibrate?
Yeah, it's certainly getting a lot of attention. It's probably not what he wanted when he signed up for this, but he's never really been averse to controversy. Seems to enjoy it, and it sort of drives eyeballs on his X platform. So it's probably good for business at the end of the day if you're looking at what the price of that stock's going to be at the end of the year. Long story short is these are people who have just resigned from Doge, some of the most competent digital operators within the federal government. And they've been the ones who've been seeing what has been going on with Doge inside the Treasury Department payment system, the IRS tax records, the Veterans Affairs services that go to veterans. I mean, they are the ones who have been seeing from the inside what kind of penetration is going on digitally by Doge. And the fact that they are resigning en masse, that's a third of that workforce walked out the door yesterday, is really troubling. And I think, it's going to be hopefully up to the media to sort of make light of what it is their concerns were and see if Congress finally reacts to this. I mean, they certainly got enough hammers. They're sitting on a lot of legislation and confirmations that the president wants to see happen. So they're not without their influence. The question is, are they motivated to do anything?
The mass resignation, Jeannie, has prompted a response from the White House press secretary, Caroline Leavitt, dismissing the concerns here, saying anyone who thinks protests, lawsuits, and lawfare will deter President Trump must have been sleeping under a rock the past several years. She says Trump will not be deterred from delivering on the promises he made to make our federal government more efficient, more accountable to the hardworking American taxpayer. Does it sound like any changes are coming?
Oh, it does not. And, I think most Americans agree we want it more efficient, more accountable, but that is not what we are seeing. The chainsaw that Elon Musk brought up on that stage at CPAC is an apt metaphor. They are taking a chainsaw to the federal government while at the same time he is pocketing billions in new contracts. And so I'm not sure how she can sit up there with a straight face and say that this is the type of transparency people voted for, or this is the type of accountability people voted for. And so I agree with her. Those are all the things that people want. But to do that, you need to understand how the federal government works, and you need to make sensible cuts. You need to make sensible decisions. And it is not to get somebody who is pocketing on the one hand to go in and to threaten people. And you raised the all the feedback from the Republicans, and there's been a lot. But let's just look at Jesse Waters on Fox News, no liberal, who said, they are being callous. They have to be very careful. So, Joe, if I'm going to quote Jesse Waters, I agree with him. Don't be so callous. It's not a good
through the
look
looking
for the
glass. Somebody must have spiked my drink listening to Jeannie here. Rick, I'm compelled by the optics here. Jeannie reaches for the chainsaw moment at the CPAC conference end of last week. It's a Friday night. He's swinging the chainsaw around. I don't know if we still have that. He's yelling chainsaw as if it's a verb. You've spent a career helping to package people for presentation, whether it's to run for office, to stand before voters and win their trust, or maybe to be cleared out of a confirmation hearing on Capitol Hill. What do you do with this individual who seems to be, on a personal level at least, somewhat out of control, to hone their behavior and their message to win people over? Is that even possible?
It's tricky because the very first thing you really hope for if you're going to talk to somebody about, sort of expanding their reach publicly by their image is that they actually care about what people think about them. And I'm not exactly sure Elon cares what the media or what the public thinks about him. So I think you're probably failed before you even get started. I mean, he's got a constituency of one. His entire power base is not from a state, not from a bunch of members of Congress who love him and push for him. It's one guy, Donald Trump. And he's isolating Donald Trump in this to where it may be that he's the only one who supports what Elon Musk is going to do. And then that's a rocky road. I've always felt when you're a guy like Elon Musk, you want to have the broadest possible support out there when you do these kinds of things. And when I see, governors like Youngkin in Virginia, which have the most federal workers per capita of any state, setting up job fairs and trying to put together websites to help them find jobs, I think, well, if they're good enough to work for Youngkin in Virginia, why aren't they good enough to work for Trump in Washington?
Wow. Great answer from Rick Davis. Jeannie Shanzano, our signature panel, will be back with us if you're on YouTube. I can't get enough of the chainsaw thing. I don't know what it is. We'll just keep watching President Millet hand that to Elon Musk. The chainsaw of bureaucracy. We'll have much more on the Doge and, of course, the budget battle underway in Washington in our second hour. Rick and Jeannie are going to be with us. We don't know if there's going to be a vote on a budget resolution this evening in the House, as had been planned. Speaker Mike Johnson, talking to reporters earlier, says maybe we will, maybe we won't, because there are still Republican holdouts here. And it's all part of the same conversation. They're trying to reach for spending cuts and tax cuts that will make the rank and file happy, but also not raid the cookie jar when it comes to Medicaid. This is going to be quite a dance here over the next couple of hours or days, depending on what form this takes. Kaylee Lyons is on the way in next, and we'll welcome our global television audience to the conversation. So stay with us on the fastest show in politics here on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
It's prove-it time for the House. Welcome to the fastest show in politics as Speaker Mike Johnson casts fresh doubts on whether his Republican conference can actually pass a budget resolution today. I'm Joe Matthew alongside Kaylee Lyons in Washington. Welcome to the Tuesday edition of Balance of Power here on Bloomberg TV and radio. This is an interesting one, Kaylee. It's not like Mike Johnson is trying to convince Democrats to vote for this. He's just trying to wrangle members of his own Republican Party.
And yet there's multiple members of the Republican conference in the House who have suggested they will be voting no to this bill. You could include Tom Massey, Victoria Spartz.
That's right.
Warren Davidson, I believe, told reporters today that he is not for this budget resolution because he wants government funding, which expires March 14th, sorted out beforehand. So three's enough to sink this thing, and it very well could be more than that, as there's moderates who have concerns about potential cuts to Medicaid.
You can only survive one no vote from a Republican, assuming all Democrats vote no on this. And you're right. The other wrinkle here is the real deadline, which is only a couple of weeks away. A potential government shutdown. There is no plan or agreement on top lines or any way to avoid that. And we're all trying to do this all at once. So welcome back to Washington.
Yeah, and more people here in Washington, I have to say, are telling us that they think a shutdown is more likely this time because it doesn't seem Democrats are willing to play ball to avert one. And I guess it's a question of when the market may wake up to that risk because it's not that far away.
Yeah, we're used to kind of ignoring this and eventually kicking the can. I will let you know, Bloomberg Intelligence and Nathan Dean, who appears pretty often on this program, they have decided to start running odds on a shutdown starting Friday, which should say a lot.
Indeed, and we'll get more on this with Libby Cantrell of PIMCO in just a moment. But we begin, as always, with a check on the markets. And Charlie Pellet has a look from New York. Hey, Charlie.
Hi, thank you very much, Kayla Lyons. And here's what's going on. We've got the Dow higher, the S&P, NASDAQ, all in the red. NASDAQ 100 index moving lower. It's 4-day loss, now around 5%. S&P 500 index, to keep it all in context, down 18 points right now. That is a drop of just about 0.3%. The Dow, though, higher, up 0.4%, up 180 right now, while NASDAQ is down 180. The NASDAQ Composite Index down 0.9%. As I mentioned, the NASDAQ 100 Index down 0.8%. Stocks getting clobbered, bonds surging. We've got the 10-year 4.30%, with the 2-year right now 4.09%. Gold is down $43 the ounce, just above $2,900 now, down 1.5%. West Texas Intermediate crude 68.87 a barrel, down 2.6%. But Bitcoin, $87,300 on Bitcoin, slumping now by 7.1%. The Bloomberg Magnificent 7 Index, an equal-weighted gauge that consists of Apple, Nvidia, Microsoft, Alphabet, Amazon, Meta, and Tesla, has fallen roughly 10% from a December high. That is passing the threshold that meets the definition of correction. Out of the 7, Apple, the only one higher right now. We've got Apple up by 0.6%. But again, Nvidia, Microsoft, Tesla, Amazon, Alphabet, and Meta all trading lower. Again, recapping, S&P 500 index down 16, a drop right now of 0.3%. Balance of power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet with a look at trading on this Tuesday. Thank you so much. And it was this Tuesday, I guess it still is, that we're expecting the House is going to try to move forward on its budget resolution. I say I guess because even the House Speaker himself wasn't totally clear as to whether or not tonight was going to be go time, keeping in mind the vote was originally scheduled to take place around 6 p.m. But Mike Johnson, when speaking to reporters at the Capitol earlier, seemed a little wishy-washy on this, though he does stand by the one bill package. This is what he said.
We do not have time to waste. The American people are expecting us to deliver on this, and we will. And House Republicans need to unite so we can keep this process moving forward, and I think they all understand that. We're working right now to get everybody on board. I think everybody wants to be on this train and not in front of it.
There may not be time to waste, but we have no clarity on how much time, I guess, we have here, Kaylee, to your point. Speaker was asked right after that moment, are you committed to the vote being today? He said there may be a vote tonight. There may not be. Stay tuned. So we've got another game day call here for Mike Johnson. Yeah, look, if you can only lose one here, obviously, this is a pretty difficult exercise. He had meetings late last evening that resumed early this morning with some of the holdouts, and we're joined right now by Jack Fitzpatrick, specializes in appropriations for us here covering Congress at Bloomberg Government. Jack, what do you think? I know you're hearing a lot of the same stuff we're describing. Will there be a vote today?
It's not looking great for a vote today. They haven't officially put it off. But when you hear the speaker kind of hesitating on the vote plan, that tells you something. Even this morning, we heard from 4 people directly who right now are no votes on the House Republican side. And as you mentioned, you can only afford to lose 1, assuming all the Democrats show up. Now, some of those no votes are pretty dug in. I would say Thomas Massey, who described himself as a hard no on this budget resolution, I'm not sure if they can really negotiate with him right now. There are others, though. Tim Burchett, Republican from Tennessee, said, nobody's met with me. The speaker hasn't met with Burchett. Leadership haven't really tried to win him over. He wants some at least verbal promises on spending cuts and something very conservative in the ultimate bill. So there are some people you can work on, but right now they have more than 1 no vote, and so they've definitely got work to do to get to actually holding this vote. Doing it today would seem pretty tough.
Well, and the first real test is coming pretty shortly, right, Jack? They have to vote on the rule on this bill first, and that's scheduled to happen at this hour.
Yeah, that could be a test. Someone asked Warren Davidson, who is one of the no's right now, are you going to vote against the rule? And he was kind of wishy-washy on that. The thing to know about the reconciliation process in all of this is there are a ton of opportunities to block it. So you don't need, if you're a conservative who wants a more aggressive path to spending cuts, you don't need to oppose the rule. And we haven't really heard a lot of people specifically saying they're going to oppose the rule. You can vote in favor of the rule and then take down the budget resolution, or you can support the budget resolution and then take down the ultimate bill. So it gets progressively harder. I'm not sure that an acceptance of the rule would necessarily even be a good sign. A lot of people are focused on that second vote that's supposed to be later today on the resolution itself.
Well, that's really interesting and a great point that you make here, Jack, because the fact of the matter is it doesn't say anything about cutting Medicaid in this budget resolution, correct? This is the assumption that if you're going to reach a certain level of cuts, you're going to have to raid the cookie jar at some point and get to entitlements, and it looks like Medicaid would be the answer there. But a lawmaker can vote for this and still not be pinned down in a campaign ad saying that they voted to slash Medicaid.
Yes, what's in writing here is a direction, among many directions, but a direction to the Energy and Commerce Committee saying you have to cut $880 billion or raise revenue, which Republicans don't really want to do. It's hard to see how they get to that without probably cutting a combination of Medicaid and maybe of the SNAP nutrition aid. So there are some politically sensitive things there, but because this is not the bill itself that would do that, you've seen some openness from the moderates who might be scared off. Nicole Maliotakis, who was kind of negative sounding when speaking to you yesterday, sounded a bit more positive this morning. It's more the conservatives who are holding things up than the moderates, because the moderates know if I don't like the details of what happens on Medicaid, you can stop the bill later in the process, even if you let this resolution go forward.
Well, and of course, there is still a lot of time left for debate on this, Jack, as the expiring tax cuts do so at the end of the year. So theoretically, they could have until then to get their act together on this. The timeline we're working with on keeping the government funded, though, is much shorter. We're 17 days out from the deadline. Are you seeing any signs of progress being made toward a deal to avert the lights going off?
Very little progress on government funding. It's the March 14th deadline to avoid a shutdown. The negotiators have told us they're not that far off on the numbers, at least the preliminary numbers of how much you're going to spend on defense and non-defense. But Democrats have said, why would we support this agreement if we don't have assurances that the money is going to be spent? Because simultaneously you have these efforts by President Trump and Elon Musk to pause funding, to cancel contracts. They want something either verbally or in writing. I'm not exactly sure what the latest offer is from Democrats, but they need something to ensure that the money will be spent. And that is a hard thing to get across. There's not a lot of progress on that discussion. And so there's a big gap to bridge still as we get closer to March 14th.
Clock is ticking. Jack Fitzpatrick of Bloomberg Government Live for us from Capitol Hill. Thank you so much. And of course, Joe, is us, Jack, us here in Washington all focus on the way in which this policy is getting done and all of the politics behind it. There also is just a question of the need for the policy to get done in the first place and what it means for financial markets and our audience specifically here on Bloomberg TV and radio.
Dealing with massive amounts of uncertainty right now. whether it's this budget resolution, what form of tax cuts, how long will the extension be? Don't even ask me about Doge.
Well, and then there's, on the subject of Doge and attempts to cut spending, what it all means for a deficit that the bond market increasingly seems a bit worried about. And that is something that we spoke with Maya McGinnis of the Committee for a Responsible Federal Budget about last night. She was walking us through the actual math here, which in her view doesn't make sense.
We can also scale back the price tag of this tax cut. 4.5 trillion, 5 trillion. This makes no sense given our fiscal situation right now. If we want to extend these tax cuts, we should extend the ones that are most pro-growth, most important, and offset a lot of them by broadening the tax base. There's $85 trillion in spending over 10 years. They're cutting $2 trillion out of that. This is not taking a sledgehammer to the government. It's a very small amount.
So for more on this, we turn to Libby Cantrell, PIMCO's head of U.S. public policy, who is here with us on Balance of Power. Libby, I'm sure you're getting a lot of questions about this tax package, and welcome back. It's good to see you. What are you telling clients that ask, A, if this is all going to be able to get done in the first place, and B, what it means in the long term? If yes, markets like tax cuts, but there's also the deficit to consider.
Yeah, and great to be with you. I mean, I think, you know, the sort of the bottom line that our clients are most interested in is, it's your earlier point, will this get done and for how long? I mean, I think there's a real question of whether this is extended for a short period of time, just several years, whether it's extended for the entire what's called the budget window for 10 years, or whether it's made permanent. And of course, there are members in the Senate in particular, Senate Finance Chairman Mike Crapo in particular, who wants to see an extension, a permanent extension. So I think that, you know, for kind of the bond market, for investors and our clients, I think they're most focused on, you know, will this get done? And I think our message is unequivocally, yes, this will. But again, there are just some questions about what the kind of the scope of this looks like, and if this is just an extension or whether there are additional tax cuts. The other thing I will just say is, you know, more clients are asking, as maybe some concerns of growth are starting to weigh on the market, is what the cuts would look like and how draconian are they, how front-loaded they are, and how significant could they be from a growth perspective. So kind of two sides of the coin, of course.
It's great to see you back, Libby. Where's your optimism coming from? Because as you point out in your note to clients just yesterday, getting them ready for this moment, the ultimate reconciliation bill is basically instructions, the guardrails for the ultimate reconciliation bill, and we can't even agree on this. What makes you think the actual bill with the actual money inside can pass with a majority of one?
Well, Joe, it is a good question, but my optimism, I think, comes from the place that there really is no, you know, decision otherwise. This is in many ways existential for House members and for members of the Senate. They just simply cannot let the U.S. economy kind of go over this fiscal cliff, if you will. That's how they would characterize it. So for politically speaking, there really is no other choice. And as we all know, political expedience oftentimes rules the day in Washington. So that is where my optimism is coming from. However, I do think it is going to be a circuitous route to get to that destination. As we are just seeing, as you point out, if you can only lose one vote, that's not really a governing majority, if you will, even on something like tax cuts, and particularly when you sort of put into more controversial items like potential Medicaid cuts. So this will not be, again, a linear road by any means, but we're confident by the end of this year, you will see an extension of the tax cuts. Again, just a question for how long, and if there are additional tax cuts and accompanied by other spending cuts.
Are you as confident, Libby, that lawmakers can find a way to avert a shutdown just weeks from now, or is that something markets need to start bracing for?
Yeah, well, again, I think markets are, you know, have become, and maybe rightfully so, relatively impervious to this sort of shutdown rhetoric. I think that folks sort of assume that they've seen this movie before, that even if the government does shut down, as long as it's a temporary shutdown, that it actually hasn't really weighed on economic growth. I think it's probably too early to put odds on whether there will be a shutdown. I do agree, though, with the previous reporter that you know, the Democrats are really don't have really any appetite to play ball with Republicans right now. I think there's some real concerns that they're hearing from their constituents about the DOGE impact, and particularly around federal employee terminations and what have you. So I think they're going to want something in order to, to advance a government funding bill. And I think it's just the real question is whether Republicans are willing to give that to them. So I think, again, probably too early to say. You never underestimate kind of the power of, again, political expedience. And I think that the political incentive here is to keep the government funded. But, again, open question of whether they'll play ball with each other.
Well, that's a pretty difficult balancing act that you're describing there for Mike Johnson, and I suppose he's getting used to these. If he ostracizes Democrats here in the budget resolution, but needs to rely on them to pass a continuing resolution to keep the government funded, how does he do both?
Yeah, I mean, I do not, I don't think any of us envy Speaker Johnson's position right now. Again, I mean, he has the smallest Republican majority in the history of the Republican Party. So he is, he is really trying to navigate a very difficult, road right now. And I think that, Jim, as you know, I think that that the reconciliation package is going to be a partisan package. So I think that Democrats were expected to be alienated. I don't think they were expected to be included in this process. But again, I think that there is going to be some sort of demand for concessions from Republicans going into this government funding fight. And I think it's a question of whether Speaker Johnson feels like he can give that to Democrats. And again, I think that's really an open question. He has a very full plate, though. I think that's the upshot. And then, of course, we haven't even talked about the debt ceiling. And even though the debt ceiling increase is included in this reconciliation, this budget package, I think it remains to be seen whether that's addressed as well. So this is going to be a very, busy few months for the speaker. And again, I don't think any of sort of unenviable position, by and large.
Well, the president's been busy too, Libby, and in our final moments here, he told our colleague Jordan Fabian at the White House yesterday that he is intending to move forward with 25% tariffs on Canadian and Mexican goods a week from today. Do you call that bluff?
Well, I don't think, we're not in a position to call the president's bluff or not. I will say, though, Kayleigh, that what we're hearing from our clients is both domestically and abroad is a lot of concern just about just tariffs writ large, of course, but particularly on these potential 25% tariffs on Canada and Mexico. As we all know, the three economies are incredibly enmeshed. There could be a lot of knock-on effects, both from an inflation perspective, but even more from a growth perspective. And I think this is something that the market may, they're very oriented towards the inflationary impacts of tariffs, but we have guided our clients to be focused just on the headwind to growth from tariffs as well. And particularly if you put 25% on Canada and Mexico, again, just given how entrenched those economies are. So a lot of concerns. So I don't, again, not calling his bluff or not, but we have to take his threat seriously. He is, of course, the President of the United States.
Program is brought to us by the word uncertainty today. Libby Cantrell, thank you so much, Libby. It's great to see you back with us here on Balance of Power. Head of U.S. Public Policy at PIMCO. I'm Joe Matthew alongside Kayleigh Lyons. We'll assemble our panel next. We have both Rick Davis and Jeannie Shanzano with us as we stare down the barrel of a possible vote on a budget resolution later today in the House and count down to a possible government shutdown at the middle of next month. It's all ahead right here on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow higher, the S&P, NASDAQ, both declining right now. Tough day for tech. We've got NASDAQ down 186 points right now. That is a drop of just about 1%. Dow Jones Industrial Average, though, higher by 164. The Dow up by about 0.4%, while the S&P 500 index now trading lower by 20, down by 0.3%. The NASDAQ 100 index is down by 0.9%. The 10-year 4.30% with a 2-year at 4.10%. Gold down $44 the ounce, tumbling 1.5%. The precious metal just above 2,900, 29.07 on gold. West Texas Intermediate crude 68.85 a barrel, down 2.6%. While Bitcoin, a major story today, major sell-off there, down 7.4%, just above $87,000 right now on Bitcoin at 87,017. Stocks are getting clobbered. Bonds are surging. There's another disappointing reading this morning on the consumer, fueled concern about the health of the U.S. economy. Home Depot shares up 4.5%. It does expect a key sales metric to return to growth this year, but the retailer is cautioning that housing demand will not change significantly in the near term. So Home Depot up 4.5%. Lowe's, the other rival home improvement retailer, up 2.9%. It reports tomorrow. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York. Thank you so much. I'm Kaylee Lyons alongside Joe Matthew here in Washington. And stop me if you've heard this before. But here in Washington, on Capitol Hill specifically, we find the Speaker of the House, Mike Johnson, in a pretty tough spot today. He, of course, trying to get a budget resolution through his chamber with only the votes of his conference. Just Republicans are expected to get this thing across the finish line.
Yeah.
And once again, counting them with only one vote that he can afford to lose is proving to be pretty difficult.
So it's just another Tuesday.
Yeah.
Are you suggesting that we've seen this movie before?
A few times,
Maybe Mike
yeah.
Johnson has? Majority of one, though, is sort of new level, to the point where Elise Stefanik has to hang around Washington for weeks longer than expected. Instead of being confirmed as our next ambassador to the UN, they've basically shelved the confirmation process to maintain the one-seat majority that we're talking about today. And it is unclear if we're even going to get a vote on a budget resolution, Kaylee, because corralling all of these members to agree on this massive bill has proven to, at least so far, be impossible for Mike Johnson.
Yeah, we were just checking in with our colleague, Jack Fitzpatrick from Bloomberg Government, who said already 4 Republicans have said they are no's at this point, and unless that can change in a matter of hours, hard to see how you justify putting this thing on the floor. Although this speaker also has not been shy in letting things go down before all the votes are solidly in his corner.
Miracles can happen. He was asked, committed to the vote being today. This is a direct quote. There may be a vote tonight. There may not be. Stay tuned. That's where we start with our signature panel. Rick and Jeannie are both with us today. On Balance of Power, Rick Davis, Republican strategist and partner at Stone Court Capital. Jeannie is our Democratic analyst and senior democracy fellow with the Center for the Study of the Presidency and Congress. Jeannie, I'm pretty sure there are no Democrats who are going to help out with this process today. Can Mike Johnson get Republicans to clear this bill?
Yeah, that statement he made was about as clear as mud. There may not be. Certainly no Democrats are going to go along, but I'm going to go out on a limb here and say if I was Donald Trump, which I clearly am not, I would say to Mike Johnson, this is about the easiest thing I'm asking you to do. I know you have a 1-vote majority, but here's the reality. You are asking people to vote to move forward. There is nothing in this language which talks about cutting on Medicaid or anything else. So if he cannot bring these people to help them move forward for a budget blueprint, how is he going to get to the next difficult step of putting actual numbers and cuts on the table? So if I'm Donald Trump, I'm thinking of this as like, this is it, Mike. You get this vote. If you can't do this, there's no hope. So I think Mike Johnson gets this done at some point.
Well, if we all just rewind to January when Mike Johnson was trying to get the speaker's gavel in the first place and didn't look like he was going to have the votes on the first round, guess who got on the phone, Rick Davis? It was then President-elect Donald Trump to force the hand of those Republicans who were still holdouts. Do you think we could see something similar happen here?
Yeah, I suspect even today, if Johnson doesn't have the votes, and it sounds like he doesn't, and it's not that close, if he has 3 or 4, then he probably has more holdouts, then he's going to need some help. And what's interesting is some of the reporting we've been getting from our team at Bloomberg is that some of these folks haven't even been contacted yet. So before you go to Donald Trump, maybe it's better to have your whip actually do a vote count. These would be standard operating procedures before a big vote like this. So I guess we maybe are on a slow roll, and this is going to take longer, and they've got to reach out to some of these recalcitrant members. But Donald Trump's not going to want his big, beautiful bill to fail. That actually reflects poorly on him. He has no distance between him and the House Republicans. He is basically the Speaker of the House of Representatives. He owns that caucus. And so if he's going to own it, then he better make sure it doesn't break.
Well, what do you think about that, Rick? Tom Massey hasn't even gotten a phone call yet. Meanwhile, Mike Johnson was in meetings late last night that resumed again earlier this morning. Is this a speaker who's still learning on the job?
Well, for sure. He's always had some issues with vote counting. You really wonder what's going on in the leadership. Scalise just a couple hours ago was out saying we're still going to vote today. Doesn't seem like they've got the best of communication. And this is a speaker who has actually spent a lot of time, unlike previous speakers, getting into one-on-one conversations with members, brokering these deals, rather than having his leadership team, like Scalise, give them at least some deniability so that he can weigh in with any benefits that need to go to these members in order to get them to do the right thing for the leadership. So, this is not what you've gotten used to if you've been hanging around Washington for a long time and watched the powerful job of the speaker get executed in a more, I would say, refined method.
Well, if we think about what we heard from Steve Scalise earlier this morning as the Republican leadership in the House spoke to journalists, Jeannie, he noted that Medicaid cuts are not actually mandated in the language of this budget resolution. It's just where everybody is naturally drawing a line when they see $880 billion that need to be cut in the Energy and Commerce Committee. Specifically, does he have a point there as Democrats are trying to say this is Republicans setting the stage to cut Medicaid benefits? Is there still some cover provided to those moderate Republicans potentially who are considering voting yes for this?
Yeah, that's absolutely right. There is cover. Now, the reality is there's no other place to cut. So once they get this blueprint, if they do, it's going to be Medicaid. So the Democrats are absolutely right on that. But the reality is they do have that cover. And this is why I go back to, if this is the biggest test Mike Johnson faces and he can't jump over this hurdle, how can he be expected, or how can the president have any faith he would be able to get the next really difficult part of this done, which is going to be the actual cuts? So I don't think this is a huge haul for Mike Johnson, but if it proves to be and he doesn't get this done, this bodes very badly. And I agree with Rick. This is a huge, huge legacy moment for Donald Trump. Legacies are not built on EOs, no matter how many of them you sign. It is all about legislation. Joe Biden got a lot of legislation done in his first year. If Donald Trump cannot keep that up, if he cannot meet that moment, he is not going to have a legacy to stand on. And he knows that, which is why what happens today and in the next few months in the House, or what doesn't happen, is going to be so important to him.
I want to mention a couple of headlines that are coming from the White House briefing room right now. Caroline Leavitt is briefing reporters as we speak. With 1 million federal workers, we see the headline now, responding to the email request that went out for them to justify their jobs for last week. There's still some confusion over a new midnight deadline tonight as agencies tell their workers not to acknowledge Elon Musk's email. Also, Kaylee, Donald Trump expecting Volodymyr Zelensky to sign a minerals deal. I guess that's not too far away from what he said yesterday, suggesting when Scott Bessent spoke that they were on the 1 yard line.
Yeah, the Treasury Secretary certainly sounded optimistic, and we heard from the president as he had the French President Emmanuel Macron there with him at the White House, suggesting that Volodymyr Zelensky, at least in Trump's mind, could make a trip to Washington
That's
this
right.
week or next to actually sign this thing.
Which might fulfill that headline as we learn more. Interesting, though, as we keep our eyes on the briefing room, we haven't had a chance to talk about this much with Rick and Jeannie. The competition that we're watching right now between, if I can use that word, the Trump administration and the Associated Press. This has gone to the courts, of course. The AP was removed from a few Oval Office events because they wouldn't call the Gulf of Mexico the Gulf of America.
Yep.
By the way, they did move Mount McKinley away from Denali, but that's a different matter. A federal judge cleared the way for the White House to continue barring the AP from these events. And interesting, Kaylee, as we were winding down the program yesterday, we were looking at the briefing room, sitting here in the studio, and we saw on the big LED screens in there a victory banner with an image of the Gulf of America to troll the Associated Press. And Caroline Levitt has been taking questions on this. Jeannie, I wonder your thoughts here. Quote, "It is beyond time the White House press operation reflects the media habits of the American people in 2025, not 1925. Is she right?
No, she's not right. In fact, when I heard there was a victory sign up in the White House, I couldn't imagine what they were celebrating because it hasn't been a very good few days for them. But they are apparently celebrating what this judge decided. But if they really paid attention to what he decided, he said, yes, we're not going to order the AP back in right now. But he said it is very possible that the AP could win here because the White House did not follow due process, arguably, when it removed the AP for an editorial decision. So I think this may be a little premature. I'm having I don't know, who was it? George Bush vibes about, what did his sign say?
Mission accomplished, maybe?
Mission accomplished. Thank you. Bringing back those vibes.
Rick, weigh in here because the press secretary is also telling journalists that the White House is going to be opening its press pool to new voices. We already, of course, have seen the addition of some of those. We're talking about, yes, different kind of journalists than we historically have seen covering the White House. Does that serve a purpose in this day and age?
Well, for sure. I think there's a realization that everyone should make, which is podcasters are not only making news, but conveying it, certainly their version of it. And it has proliferated. Tens of millions, if not hundreds of millions of Americans get their news from these unique digital sources. And you see places like the Department of Defense bringing podcasters in to run their public affairs business. They'll have them in the room when they brief every day. So this is just a recognition of a trend going forward. I mean, the AP issue is a different issue, which is getting kicked out for not addressing the Gulf of Mexico as Gulf of America. And I guess I would actually question, what's the relevance of the debate? Do we really need a due process legal argument to boot somebody out of the White House press office? I've always had the impression that was a privilege, not a requirement. I'd prefer to have AP, on record every single day reporting from the White House. But I think that's really up to the White House. I can't imagine there's an argument that says AP owns a seat in the press room.
Yeah, lots of First Amendment questions at play here that we'll have to get into later on. Rick Davis and Jeannie Shanzano, our signature political panel, here with us on Balance of Power. We'll have more ahead on Bloomberg TV and radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow higher, but the S&P and NASDAQ, the NASDAQ 100 index as well, they continue to trade lower. Right to the numbers with the S&P down 14 now, 59.68 where we stand, a drop of 0.2%, but the Dow up 172, up by about 0.4%. NASDAQ right now down 183, a decline of 1%. Stocks are getting clobbered. Bonds surging as another disappointing reading on the U.S. consumer, fueled concern about the health of the U.S. economy. But another drop in the NASDAQ 100 has pushed its four-day loss to around 5%. Again, the S&P down 14, drop there of 0.2%. The NASDAQ 100 index now down 0.8%. The 10-year 4.30%, the 2-year 4.10%. Gold down 1.4%, 29.09 the ounce. West Texas Intermediate crude down 2.6%, 68.85 for a barrel of WTI, and Bitcoin down 7% now, 87,415 on Bitcoin. As part of a broad-based tech sell-off, Tesla's market cap has fallen below $1 trillion due to a sharp decline in its shares amid reports of a slowdown in car sales in Europe. Tesla now down by 8.1%. Recapping, the S&P down 15, down 0.3%. Balance of power continues right now, and back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. Watching Wall Street for us here on the fastest show in politics. We'll hear from Charlie again shortly as we keep tabs on the markets here. What's been a bit of a bumpy day, certainly for crypto, pointing lower. And we do have breaking news on the terminal, something that we were just talking about a short time ago and certainly was a major point of conversation yesterday as Emmanuel Macron spent time visiting Donald Trump at the White House to talk about Ukraine. Kaylee, the Financial Times leading the way on this one. Ukraine agreeing to a U.S. minerals deal after Washington drops toughest demands. The headline here, we have terms on a deal. This is the very same deal that Scott Bessent tried to get signed in Kyiv last week. It appears we have pulled back from a couple of demands that were unacceptable to Volodymyr Zelensky. And as you mentioned earlier, Donald Trump suggesting the president of Ukraine could be here in the next week to sign it.
Yeah, and we just moments ago heard from the press secretary, Caroline Leavitt, who said Trump does expect Zelensky to sign this deal just ahead of this reporting hitting from the Financial Times, which, according to their reporting, has seen the final version of the agreement, which would establish a fund into which Ukraine would contribute 50% of proceeds from the future monetization of state-owned mineral resources, including oil and gas. So that obviously is what the U.S. had been long asking for, that they get a share of those proceeds, but perhaps dropping some of the things that Ukraine specifically was more resistant to in terms of those figures.
I'd like to hear more about security guarantees, if there are any in here, and we'll let you know more as we learn it. This is the latest from the White House, unless you see something.
The FT reporting that the agreement omits any reference to U.S. security guarantees, which Kyiv had originally insisted on. Again, this is all according to the Financial Times at this point. If we are able to match this at Bloomberg, we will, of course, confirm this for you, but would be in keeping with what we have heard from the White House over the last few days.
Considering the on-again, off-again nature of a ceasefire deal between the White House and Israel, sometimes other governments are speaking to reporters, and we'll keep tabs on what's real for you here. But if we do have a deal, you'll know about it on Bloomberg.
Yeah, and of course we had, as you alluded to, plenty of talk about this yesterday at the White House when Trump was meeting with French President Emmanuel Macron. They had a long talk with reporters in the Oval ahead of their bilateral meeting, then again at a joint press conference. But interestingly, the very first question asked at that press conference of President Trump specifically was not about Ukraine, not about relations with France. Instead, it was about the new Harvard-Harris poll that had come out, showing pretty good numbers for the president. This is what Trump responded with.
It was a big poll, and it's usually a poll that leans on the other side of things, the other side of the world, so to speak. But the Harvard poll is a respected poll, and it has us not only leading, but leading by a lot, and leading on every single issue that we've talked about. And as I said, we've become the party of common sense.
So for more on this, we turn to Frank Luntz, politics and communications consultant, also CEO of FIL Inc., who is here with us in our Washington, D.C. studio. It's been a while, Frank. Good to see you. Welcome back.
This place just gets nicer and nicer every time I come back.
Oh, you flatter us. Well, I want to talk about what the actual figures in this poll were. 58% of voters are more satisfied with Trump's job as president than Biden's. Does that track with what you're hearing too?
We've been doing focus groups every single week since the election and the inauguration, and Donald Trump is keeping his focus. He promised to deal with immigration. That's one of the first things that he set forward. He promised to address Ukraine. Now, I need to point out one thing that's important, which is that the language that he's using is not as effective as it could be. But that aside, the issues, the priorities, what the public wants him to do, he seems to be doing. And so he's being rewarded for, in essence, keeping his campaign promises.
You add the Doge, and things start to get a little bit more complicated.
Correct.
This is red meat. They love the chainsaw at CPAC for a lot of MAGA. But even some Republicans are starting to worry. I don't know what the Doge focus group is going to tell us, Frank Luntz, but the Washington Post compiled comments from Republican members of Congress, specifically Lisa Murkowski. Now, granted, these are not big Trumpers. Lisa Murkowski, John Curtis, Don Bacon, Brian Fitzpatrick. They've used words such as embarrassing, cruel, absurd, extortion, and trauma. Yes.
The issue is the language, not the goal, not the mission.
Do voters think this?
The voters are tired of wasteful Washington spending. Waste, fraud, abuse, mismanagement, even corruption. And they applaud what he's doing. The question is he doing it in a way that they appreciate? There's some sadness when someone loses their job. There's pain when a family suddenly finds that the breadwinner's out of work. And that doesn't seem to be communicated from this White House. The public has an issue with his language, but not with his strategy. And it's the same thing that I hear up on Capitol Hill. If you're on the side of the status quo, you're losing. The American people have said enough, with all caps and an exclamation point, enough. But they haven't said enough about compassion, about empathy. And if this administration tones it down and does exactly what they say, says what they mean, means what they say, but does so with empathy and compassion, they're going to be even more popular than they are today.
Well, Frank, we just heard from the press secretary, Caroline Leavitt, that Elon Musk is going to be attending the president's first cabinet meeting tomorrow. The rest of the cabinet officials, presumably, who will be in that room are the ones who have been confirmed through the advice and consent process in the U.S. Senate that don't or have divested from conflicts of interest they may have. Those things are not true for Elon Musk. Does that matter to the American voter?
Nobody cares. Nobody cares. And in fact, Musk is almost a lightning rod. Musk is the best thing for Donald Trump because he's out there with the chainsaw, appealing to the hardcore MAGA people. It allows Trump to do what he's doing. And everyone who's angry at it is now angry at Elon Musk. It's actually a brilliant strategy. People keep saying that the two of them are going to blow apart. I don't see that. But Musk's language as well, and I realize I sound like a broken record, but this stuff matters in government. It matters in getting stuff done. If you communicate in a way that the public starts to resent you or reject you, it slows your momentum and it undermines your ability to get things done. Trump has focused on waste, and that is what the public has waited for, frankly, for 40 years. But they don't want to punish people just because you happen to get a check from the government. They don't want to punish you because you work for the government, and that's the feeling that's happening. You saw all these town halls when they're attacking the politicians. They're not really attacking the politicians. They want to know, can we do this better? Use a scalpel rather than a machine gun.
There have been comparisons to the town halls back in Barack Obama's first term that tipped over the whole idea of Obamacare and the Affordable Care Act. Is it different this time, or is that an apt comparison?
I think it's an apt comparison because it's performance. People are going there not to learn. They're going there not to listen. They're going there to shout.
Okay.
And so they want to be heard. But that was Trump's campaign, was a campaign of shouting, and it gave him the election. It's okay to shout if you get something done. The most important word in Washington right now is results. And if Trump gets results, he will get President Trump, if President Trump gets results, that will move his agenda forward. And he'll be able to go even further on some of these other issues that he hasn't gotten to. And the key to that is successful messaging that the public hears and sees and feels the change. They are hearing and seeing and feeling it, but they're getting the negative as well, and that doesn't need to be happening.
Well, so when we talk about the change the public is looking for, what about what they're seeing at the grocery store? Price of eggs, just inflationary dynamics in general. We look at the consumer confidence data we got today, fell by the most since August of 2021. On concerns about the outlook, you saw inflation expectations pick up. Is that going to come back to bite this administration in short order?
It absolutely could, and the key for the president is to lower expectations. There are some things that you can do in 30 days, such as what he's doing with Ukraine. Whether you agree with it or not, he is moving towards bringing that to an end. Inflation doesn't rise or fall in 30 days. It's a longer process, requires supply chain fixes, requires lower energy prices. There's so much involved in it. And from a political standpoint, Americans don't pay attention to that. They simply pay attention to affordability, food, fuel, housing, and healthcare. The president would be well served to lower expectations because it's going to take 6 months or a year for his policies to actually have an impact. And by saying that he's going to bring it down now, you shouldn't make that promise, and that could hurt him as well. You know, it's weird because I'm listening to what I'm saying here. As a president, he's been the most significant since FDR. He's caused more change, more agitation than any president since Andrew Jackson. And it's remarkable how people have already taken sides. But the public is supporting what he's doing. The concern is how he's doing it. And that's something that maybe he'll get the message. Maybe he'll see this video. I think he wants to do it his way. I can hear Frank Sinatra playing in the background. But in the end, how he does it determines his success or his failure.
You could hear Steve Bannon talking in the background, too, not even about Elon, but about flooding the zone. You're a communications expert. This is essentially what we're talking about. Can he keep up this clip beyond the first 100 days? Is that even a strategy, or is it to get them on their heels at the beginning of the term so you can get done as much as you can in a closed window?
So again, I do this often to compliment both of you because you're saying exactly what the public is thinking. Can he keep it up? The answer is yes. He absolutely can. But when you do that, when you flood the zone, you make mistakes. When you flood the zone, there's a positive and a negative to it. And the question for the Trump administration, does he seize every opportunity and minimize the risks of failure? At this point, he looks like it's maximum effort with maximum challenge to that agenda. He's going to do it. So the question is, can he prepare himself and there are people around him to say, that one you shouldn't do, that one you should pull back on? I don't think so. But that's the challenge for this administration.
Well, and there's also a question, too, here, Frank, about how much approval of what Trump is doing even matters. When he entered a lame duck, he can't, at least the way the laws are written now, run for a third term in office. That same thing is not true for a number of people on Capitol Hill who are trying to get reelected next year. When you look at the midterms, is the picture is the road ahead as easy for some of these lawmakers who are going to try to seek re-election because of the policies of this administration?
So promise me you won't get angry with this response.
Never.
There is some, that's not true. There are some things more important than elections. This is a very critical time for this country. There are serious divides, there's serious anger, there's a loss of faith and trust in the future. There's a belief that our institutions are failing us. That whether or not they get reelected is not the question at this moment. It's whether or not we can put our country back together, whether we can take this shattered puzzle that is incredibly beautiful when it's united, but it looks pretty ugly as pieces on the table. I'm hoping that this president keeps his promises, continues pushing forward, adopts the language so that the public can really hear and see what's happening, and has a little bit of empathy. Because that's a successful democracy. When your voice is heard, when it's paid attention to, and you can actually see the changes happening. Some of that in the first 35 days is happening. But there are danger. There's threats that is also. And that messaging, I would just love a little bit of a Lincoln or a Jefferson or a Washington to kind of get, or a Churchill, to get into this communication. Because it's not just about the details of today or how they impact the election tomorrow. It's what happens for your children and your grandchildren and the generations to come.
Let us know when they call you and you have that conversation at the White House. Frank Luntz, F-I-L. What a treat to have Frank Luntz in studio. Thanks for coming in. It's great to see you, as always, here on the fastest show in politics. I'm Joe Matthew alongside Kaylee Lyons. And we'll get back to this 5 p.m. Eastern time on the late edition of Balance of Power. Maybe we'll know by then if they're going to have a vote on this budget resolution.
Could be on the verge of one or just seen the vote get pulled in the House. We'll give you the latest on Bloomberg TV and radio.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody, live on TV, radio, YouTube, and Bloomberg Originals. This is Bloomberg Business Week for this Tuesday, February 25th. Carol Masser, Tim Stenivek. And Tim, the setup on this Tuesday, we've got stocks down off their worst levels of the session, but we did have a disappointing read on the consumer, and that's definitely weighing on things.
Yeah, the Mag 7 as a whole dipping into correction territory. One of those stocks, Carol, is Tesla. Sales tanking in Europe shares taken here in the U.S.
All right, that is certainly top of mind for us. Also top of mind, tougher chip controls over China may be coming from the Trump administration. Stocks lower, too, on the overall downward trade, but we're going to get into the specifics of what may be coming.
Also, Bank of America CEO Brian Moynihan on rate cuts on a day when U.S. consumer confidence fell the most, going all the way back to August of 2021.
Yep, always keeping our eyes on the U.S. economy. And a judge asks, where is Mr. Musk? We're going to get into that in just a moment.
All that and more coming up over the next hour right here on Bloomberg Business Week. First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
Hi, thank you very much, Tim. And here's what's going on. We've got the Dow higher, the S&P, NASDAQ, both in the red right now. 21-point drop on the S&P 500 index, 59.61 where we stand right now. That is a drop of 0.4%. Dow Industrials, though, up 130, up by about 0.3%. While the NASDAQ Composite Index, hard hit today, down 215 points. That is a drop of 1.1%. The NASDAQ 100 index now lower by 1%. The decline has pushed the NASDAQ 100's loss to around 5%, the most since early September. We have got the S&P, as I mentioned, up 0.4. The 10-year, 4.30%. The 2-year right now, 4.10%. Gold down 1.4%, 29.10 the ounce. West Texas Intermediate crude down 2.6%, 68.89 a barrel on WTI. Today's selling heaviest in speculative corners of the market. Look at Bitcoin down 7.4%, just above $87,000, $87,022 on Bitcoin right now. The Bloomberg Magnificent 7 Index, an equal-weighted gauge that consists of Apple, Nvidia, Microsoft, Alphabet, Amazon, Meta, and Tesla, has fallen 10% from a December high, passing the threshold that meets the definition of a correction of the 7 names I mentioned. Only one is higher. That is Apple, up now by about 0.4%. Again, recapping, S&P 500 index down 23 right now, down 0.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much for the setup on this Tuesday. Well, a quick unwind in the shares of Tesla, pushing the EV maker's market cap below the coveted $1 trillion mark today. Reports of a stark slowdown in car sales in Europe. Tesla shares, by the way, down nearly 40% since mid-December. So we've really seen a slide, I should say, since the elections.
Well, let's go to London and to Bloomberg News, where we find our global autos editor, Craig Trudell, who's standing by. Craig, Tesla sales plunging 45% last month across Europe. Overall sales soaring 37%. Is this a story about Tesla, or is it a story about Tesla's competitors?
I think there's a little bit of both here, and it's going to take us some time to kind of sort through, some of the factors at play. It absolutely is the case that, Tesla's kind of fighting with one hand tied behind its back. When you are changing over, all of your plants that make your most important vehicle, you're going to have some trouble with lost production and tighter inventory. And so certainly that's, coming into play early this year. They have a changeover for the Model Y. But I think, what's really going to be interesting as the year progresses is just how much does Tesla take it on the chin as Musk becomes, all the more polarizing over here in Europe. He's really asserted himself in political, conversations to an incredible degree.
Well, that's what we want to dig into. But I want to get into, first of all, the CFO did warn about these assembly line changeovers, that it would happen. How much of the slump that we're seeing in sales can be attributed to that? And then we can also kind of get into how much is folks pushing back on Elon Musk.
Yeah, I think that's part of the challenge is we don't have a lot of particulars from the CFO. He just said, all the plants will change over. That'll cost us some weeks of production. He didn't, specify, schedules. The company is pretty tight-lipped about those sorts of details. And I should say, that's not uncommon in the industry, right? You do have this happen where car makers, go from one design to another, and it results in some disruption in manufacturing. But for the company, they've only, offered a little bit of detail, just that every plant that makes the Model Y, which is 4 across the world, they make that vehicle in China, in Germany, and in a couple plants in the U.S. And so, that absolutely is coming into play here. I think, the question, of course, is, just how much brand damage, again, may be occurring here because of Musk.
Okay, so let's talk about that, because you brought numbers to your story about how people in different parts of the world view Elon Musk. Certainly here in the United States, anecdotally speaking, I've seen the stickers that say anti-Elon Tesla Club, and we've talked about those folks who are, sort of associating him with the brand, but not totally associating him with the brand and still have the car. How is he looked at in Europe?
Yeah, I mean, I think in Germany, he just very emphatically supported the AfD, right? The far-right party in Germany that we should say, placed second in Sunday's election. But that is a hugely controversial party, even, among Germans, despite that support. That support was still in the 20s, right, in terms of percentages. And a lot of people sort of view that party as sort of, if not Nazi, outright Nazi sympathetic, or sort of flirting with that. Over here in the UK, Tesla has, praised the Labour government for some of its, sort of more forward-thinking policies and efforts to, encourage EV adoption. But Musk, meanwhile, is really going after Keir Starmer and some of the folks in his administration in really just out there ways. And so, the way that Musk has asserted himself has really turned a lot of heads over here. And I think, to the extent that Trump is unpopular over here, of course, Musk has aligned himself with Trump in pretty dramatic fashion.
Well, and I do wonder, Craig, we have definitely seen people pushing back here, protests at Tesla dealers and so on and so forth. And I'm just curious, are you seeing that also play out throughout Europe?
I think there's no doubt that there are still a lot of people in this world who still hold, Musk in high regard, who still sort of see him as Iron Man, as they saw him in the past. He had a cameo in one of those films, right? That being said, I think he has gone from someone who's been, a little bit out there, a little bit sort of quirky online, to, on a day-to-day basis, he is, attacking political figures, calling for people to be imprisoned. We're not talking about, sort of, just sort of wrapping himself in the flag and rah-rahing, the party that he likes. He's really, picking really pitched battles. And you have to wonder, at what point does Tesla start to sort of bear the brunt of that, being something that people disagree with?
Yeah, well, there's the other part of the story, too, which is that even though shares are down close to 40% just since those December highs, they're still up more than 20% since the election. I do wonder at what point Tesla shareholders say, you know what, we got to get Elon out of Washington and back to Fremont, California, or to Texas, to make sure that this ship is going in the right direction.
Yeah, I mean, I think it's remarkable that a couple years ago, there was all this concern when he decided to acquire then Twitter, now X, right? And there, a lot of that concern was, is he stretching himself too thin? Is he doing, is this one company too many for him to run? He's added a couple of companies since then, right? And he's also, spending an awful lot of time in Washington. He's flying with the president. He is a pretty absentee CEO for Tesla, at least in terms of, physically where he's spending his time these days. And I do think that people do have to sort of, second guess, I guess right after the election, there was this view of, it's got to be good to have proximity to the leader of the free world, right? And maybe not necessarily. Maybe the fact that that president also, is very anti-EV is going to have some ill effects for, the biggest EV maker in the country.
Carol, we should know, too, that the White House just in the last hour or so said that Elon Musk will attend a cabinet meeting tomorrow. We heard that from Press Secretary Caroline Leavitt.
All right. So, yeah, it'll be interesting to see what kind of updates he might give at that meeting, or his participation in it. Hey, Craig, how important is the European market? I mean, I'm looking at the FA page on Tesla here on the Bloomberg. The U.S. market, in terms of revenues for 2024, obviously, it is the big bulk of Tesla's shares. China's also another big market. How important, how much, obviously you never want to see sales go down. How important, though, is Europe really to Tesla?
It does play a sort of third fiddle relative to the U.S. and China in terms of some of the biggest countries for EV sales over here. I think Tesla was able to achieve quite a bit the last few years in terms of putting a dent in the likes of BMW and VW's position. I think we also though did expect that it was going to be difficult given the sort of nationalism you see in some of the markets over here.
Yeah.
And we haven't seen Tesla dominate the EV markets in Europe nearly to the extent that it has in the U.S.
All right, we're going to leave it on that note. So appreciate it. Great to check in with you. Bloomberg News Global Autos editor Craig Trudell. Tesla shares still down about 9% in today's session. We are definitely watching shares of Tesla. We're also watching the chip area as semi stocks are lower today. It's a down market. Intel has been down as much as 6% today. Marvell Technology down as much as 6% at its lows. AMD down nearly 3% at its lows. And NVIDIA, Tim, down more than 4% at its worst level today.
Interestingly enough, the SOX only down 1.8%. There are a few spots of green in the SOX today. This, though, against the backdrop of President Trump's administration sketching out tougher versions of U.S. semiconductor curbs and pressuring key allies to escalate their restrictions on China's chip industry, possibly expanding efforts that began under Joe Biden to limit Beijing's technological prowess.
All right, so let's get to it, a semi-roundup. We've got NVIDIA earnings tomorrow after the close, and don't forget, we've also got some news from our own Ian King about NVIDIA extending a partnership with Cisco. So let's get to it. Ian's with us, Ian King, Bloomberg News, U.S. semiconductor and networking reporter out there in our San Francisco bureau. Hey, Ian, first of all, when it comes to the semi space, is it really, in terms of what we're really focusing on today or this week, NVIDIA's results? Is that what really matters to the space?
100%. I mean, the whole thesis that's been propelling these stocks to the sort of stratospheric levels that we've seen them at and that they're coming back from has been that we're going to continue to see this massive spending on AI infrastructure. We're beginning to see that belief creak slightly. And obviously, NVIDIA is the only company that can really say, hey, don't worry about it, everything's okay, or add to that concern because they're in the center of everything.
So is everything okay, Ian?
Are the kids all right?
I mean, if you look at the numbers, which is obviously what we try to do here at Bloomberg, nothing to worry about here. I mean, they're going to suffer a slowing increase in their velocity to only 75% year-on-year sales growth, which at this level, I mean, come on, right? At the same time, though, we've got things like a Chinese startup saying, hey, we can do this cheaper, we can do this better and cheaper. Do we need all of this gear? And that's obviously a concern. Then we have reports of analysts saying maybe Microsoft isn't going, all guns blazing on its expansion. Maybe it's slowing down some of its data center expansion. So there is more doubt than there was, but at the moment the numbers are not anything to worry about.
I'm so glad you brought up DeepSeek. The Philadelphia Stock Exchange Semiconductor Index, as Tim said, just down about more than 1%, but off its lows. But still, 26 of the 30 names are lower today. We've got a most-read story in the Bloomberg about how the Trump administration may be up to some tougher versions of U.S. semi-curbs and pressuring key allies to escalate their own restrictions on China's chip industry. Does DeepSeek ultimately show that the U.S., the world, can't really limit China's tech prowess?
No, it already has limited China's tech power to a large extent. The leading edge stuff has really been kept away from China, and that was the firm intention. So it has been successful in that respect. But the concern is that long term, no, we can't. We're just forcing them to go quicker in their own direction and to develop some, a lack of to basically free themselves from dependency for us. So those are the kind of competing sort of geopolitical concerns. But short term, this is a huge market for the U.S. China is the largest consumer of semiconductors, and it's a huge part of the supply chain. Any further disruptions to that, any tit-for-tat action has got to be bad for U.S. and the world's chip makers, according to investors.
How does Taiwan fall into this, geographically and politically?
Yeah, I mean, TSMC is obviously the leading manufacturer of advanced silicon. but they're 100 miles off the coast of China, and China claims them as a rogue province. So tremendously complicated geopolitical situation. The US kind of answer to that is, well, we'll force the Taiwanese and the Koreans, for that matter, to build in the US so that we'll have a diverse and a secure supply chain that won't be as vulnerable to potential geopolitical actions and everything else that may or may not manifest itself in the future.
Is there a point where Taiwan Semi, Ian, has as big a presence as it has in Taiwan or close to it somewhere else, like in the world, be it the United States or elsewhere?
I mean, the name is above the door, Taiwan Semiconductor Manufacturing, right?
I know.
Aside from the geopolitical concerns, it makes sense to keep all your eggs in one basket when it comes to semiconductor manufacturing, because transferring the technology between new factories, bringing up new factories, it's cheaper and it's more efficient if you do them in what are called clusters, and that's always been the case, regardless of whether they're in Taiwan, in Oregon for Intel, or in Keehung for Samsung, right? It's just true. So there's competing drivers here for them, and ultimately they want to control their own technology. Those are the crown jewels. Those are what has made them a very successful company. So diversity makes sense in some respects, and probably from a customer perspective, but not from the actual owner of the technology's perspective.
But is it possible? Is it possible to replicate what TSMC does in Taiwan in a place such as Arizona?
Well, they've said that they already are doing that, but then how much does that cost? And how quickly can we get to scale there? And the answer is it costs more, and getting to scale will take time. So yes and no, really.
Hey, before you go, I don't want to miss your story about NVIDIA and Cisco extending this partnership. This partnership is about AI, interesting, coming the day ahead of earnings, but what do we need to know about it? What exactly is it?
Yeah, I mean, this is just more evidence from NVIDIA's perspective. They want AI to be everywhere. They don't want to be reliant upon, Microsoft, Amazon, Meta, and Google for the majority of their revenue. They want everybody else out there using AI and using their chips. Cisco is a way for them to propagate their technology. And the same token, Cisco wants to be part of this AI explosion. Partnering with NVIDIA makes perfect sense for them to get their technology more into these systems that are being deployed across the economy, hopefully, and so that's what's going on there. We're seeing, more emphasis on that, and I think from both of their perspectives, this will accelerate the use of AI everywhere.
All right, great to know, and especially ahead of NVIDIA earnings. Hey, Ian, as always, we appreciate all the time you give us. Ian King, he is, of course, Bloomberg News U.S. semiconductor and networking reporter. I mentioned the stocks now down about 2%, so just off its lows of the session. Most names of the stocks are lower.
Tomorrow, it's a big day, Carol.
Woohoo!
Wonder what Ian's going to be doing tomorrow. It's a little after 4 o'clock Wall Street time.
Luckily, the time difference, right? It's one thing if it was before the market opened, that would be painful.
He's got all afternoon to work on that NVIDIA stuff.
NVIDIA down 2%, was down as much as 4%. Hey, coming up next, where is Mr. Musk in all of this? So asks one judge on the role of Doge. We'll get to that.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg, and we begin with a number of headlines from the Bloomberg Professional Service. Ukraine is said to have reached an agreement with the U.S. on minerals and resources. Ukraine's cabinet is expected to recommend signing the resources deal. Ukraine sees the deal as a first step to security guarantees. U.S. stocks, right now we've got the S&P down 35, drop there of 0.6%. Stocks are getting hit, bonds surging as another disappointing reading this morning on the U.S. consumer fuels concern about the health of the U.S. economy. The S&P, as I mentioned, down 34 now, down 0.6%. The Dow, though, holding on to a gain of 0.6% of 60 points, up 0.1% now. NASDAQ down 269, a drop of 1.4%. The 10-year 4.30%, with the 2-year currently yielding 4.09%. Gold down $45 the ounce, $29.06. That is a drop of 1.5%. West Texas Intermediate crude down 2.5%, $68.95 a barrel. Bitcoin, a major sell-off there. Today we have got Bitcoin down 8% right now, 86,500 on Bitcoin. And Tesla's market cap has fallen below $1 trillion due to a sharp decline in its shares amid reports of a slowdown in car sales in Europe. Tesla right now is plunging by 9.9%. Recapping, S&P down 36, down 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thanks for the update. Carol Master, Tim Stanovic live here on Bloomberg Business Week. Well, safe to say there are those that believe that moves to make the U.S. federal government more efficient is a good thing. There are others that aren't so sure, and the lack of transparency around it all, which is why we have seen U.S. courts getting involved. On that, in some cases, judges are seeking reliable information about DOJ's personnel, authority, and actions, and are criticizing the administration's lack of transparency and contradictory representations in court.
So reports Bloomberg, including Bloomberg News U.S. legal reporter Eric Larson, who joins us now in the Bloomberg Business Week studio. Eric, first up, how much legal action is going on around DOJ? Like, how do we quantify that?
I mean, there are several cases. There's probably about a dozen, but there are a handful that are really the biggest ones that we're following the most closely, especially over DOJ's access to like vast amounts of data, usually is the issue. Databases at the Treasury, Education Department, all across the federal government. And, you know, various types of plaintiffs, nonprofits, states claim that that access can be abused.
Do we even know the data that they are having access? Should we just assume everything that's in a department or an office of the government that they are looking at?
Well, to use the Treasury, for example, the issue is the payments system. So for all of the like 200 plus federal government agencies and offices that send out money for any reason, anywhere in the U.S., Social Security checks, tax rebates, child tax credits, anything, veterans benefits, all of that funnels through this Treasury Bureau that DOJ has had access to in order to go in and look at where the money's going.
But I think my point is, like, we know like all that stuff's there, but do we know that they're kind of narrowing it down? Like, do we have anything in court filings that say, well, actually, here's what they wanted to look at? You know what I mean? Like, these departments have so much data, which we know on one hand would be pretty attractive to any company that's involved in data, which is kind of every company.
Or any foreign government.
Or any foreign government. But, you know, do we have any idea of like what they're drilling down into? This lack of transparency about the specifics of what they're looking at.
Well, it is the Department of Government Efficiency, and it is about slashing costs. So the idea that we're getting from all of these different court challenges, they're challenging access that is being granted or sought to essentially reduce money being spent by taxpayers. That is what they're saying that this is about. They want to see where the money is going. This is money, of course, that's already been approved by Congress and earmarked to specific recipients across the government and in some cases, you know, the world. So that's why there are a lot of these plaintiffs are up in arms. They're saying you can't stop money that's already been appropriated by Congress. Have a new Congress come up with a new budget and handle your money that way. But this is billions and billions of dollars that are already in people's budgets, whether, you know, it's a nonprofits across the country or the USAID organization we've heard so much about with operations all around the world. All of this is just grinding to a halt, and that's what these lawsuits are really about.
Or you could say the roads we drive on or the schools that we go, like everything, right? All of this money trickles down.
I do think it's fair to say a lot of people associate Elon Musk with being the head of DOJ.
Absolutely.
What do the courts say?
Well, the courts are saying, tell me what's going on. Because
do they say he's not the administrator?
That's what the Justice Department had sort of surprised. I think a lot of people were surprised when first the White House said, "Oh, Musk, he's not a Doge administrator," because the executive order that created Doge refers to an administrator position, the person calling the shots. And like we learned in this court hearing yesterday in one of the Treasury data cases, the judge asked outright, what is Musk's role? And they really couldn't say. The Justice Department lawyer said, well, he's a Trump advisor. And they said that he's not the administrator of Doge, and they couldn't say who is. These are the lawyers in court defending Doge's actions, and they could not say who the administrator of Doge is, who's calling the shots.
Well, that's kind of, okay. So who is calling?
What were you going to say?
I don't know, because it's like you're answering my question. I mean,
well, I'd say the judge was very skeptical of this.
Who's calling the shots, or meaning that he is in charge?
Well, I mean, we'll see what her decision says, because in terms of whether or not she grants an injunction, which was the purpose of the hearing,
yeah,
she said, she made it clear that she's like, well, you know, Musk's actual role may play a part of my decision, which I think was a surprise to the Justice Department, because they said, you know, they weren't prepared to come and answer questions about Musk's role. And she said, well, I'm very interested for the reasons of who has access to this data.
How busy are the lawyers in D.C.?
Well, the ones that still have jobs,
I was going to say, which lawyers, which side of the government, right?
I think they're very, very busy. And, you know, a lot of them, we've listened to a lot of hearings, gone to a lot of hearings, and listened to different Justice Department lawyers defending the government in a lot of different ways. And they clearly are fighting a big battle here, trying to keep on top of what the Trump administration is doing, to the point where they can defend it in court, you know.
Does it, by saying that Elon is not the Doge formal administrator, in some ways remove him from, like, make him above and beyond the law, kind of remove him from any kind of liabilities or target?
That is a concern. Like, yeah, I mean, there was, if he is part of the White House office,
right,
so, and not Doge, so therefore, you know, he has an executive privilege that the presidents always have. So he's able to be protected in that way. And also, depending on whether or not Doge is an agency, you know, they could be exempt from Freedom of Information Act requests, things like that. And that's still being hashed out, again, in court.
And finally, any more word about who the individuals are working for Doge apart from Elon?
I mean, they're the ones we've heard about, you know, so much about in recent court filings. The one that was, you know, fired over his social media posts and things like that. But as far as, like,
rehired,
yeah, well, has he been rehired? I think they want him to be rehired.
Okay.
But
I'm sorry, I have trouble keeping up.
It's
you know,
really hard to keep
there's
up.
a lot of employees. Every department, federal agency, has a Doge team in it now. So as far as, like, where there's a database of their names, I'm not sure.
All right, fascinating. So glad you could just stop by, because we've been kind of trying to get our hands on an understanding of all the legal stuff that's happening, and it's a lot. Eric, thank you, as always. Eric Larson, U.S. legal reporter at Bloomberg News. We know we will be coming back to him. All right, that's some of the legal happenings around Doge. We're going to kind of stay with that.
Yeah, this is White House Press Secretary Caroline Leavitt says 1 million federal workers responded to an email request, and as Elon Musk says, the federal workers will be given a second opportunity to respond to a government-wide email detailing what they did last week. He also threatened to fire any employee who doesn't meet his demands.
All right, we teased
Is this the Twilight Zone? Like, I feel like we talked to Nathan Dean about this yesterday.
It's deja vu all over again. We teased it yesterday that we should have him back for all the happenings every day on what's going on in and around D.C. He is back with us, Bloomberg Intelligence Senior Policy Analyst Nathan D. out there in our Washington, D.C. bureau. All right, Nathan, so where are we on Elon, this second opportunity to say what you did last week?
Yeah, so obviously Elon Musk, you know, put out that message on X saying that there was this second opportunity, or else you are at the risk of being let go. But even in that White House press briefing, you know, Caroline Leavitt said that, you know, the agency leaders will be the ones making the decision. Now, she said this was due to national security concerns, but, you know, this is the soap opera portion of the Trump administration, where you have Elon Musk on the outside essentially saying that you're going to be fired unless you do something, and then the agency leaders that are ultimately going to be making the call. But what we're telling our clients is, when it comes to Doge, there are two things to keep in mind. The first is the courts. You just talked to Eric about that. The courts are getting involved. The second thing is President Trump, because while the agency leaders are the ones that are ultimately going to be making these decisions, President Trump can always go to his secretaries and say, look, Elon Musk says you got to do this, you got to do it. And Elon Musk is going to be attending the cabinet briefing tomorrow with all the other cabinet members, so it's certainly going to be an interesting time to see how it plays out.
Does it seem like there is any sort of rift starting to form between members of the Trump administration who are confirmed by Congress and Elon Musk and the folks at Doge?
Yeah, I think there's two rifts that are forming here. One is the one that's going on behind the scenes. I think, look, I don't think any of these agency leaders want to have Elon Musk telling them how they should run these agencies. This is what they were confirmed to do, and I think most of them would prefer to do it without Elon Musk's or the Doge team telling them what they should cut. But then we're also starting to see smaller rifts, not enough that would change the political calculus at the moment, but smaller rifts amongst Capitol Hill lawmakers. Some of the Republican senators, for example, are talking about questions of, is this being done in a compassionate manner? Is this being done in terms of a strategy? Or is this being done in just, darn the consequences, we're moving ahead? But none of those rifts, I think, are really at the public arena yet. And so I think this is going to continue to play behind the scenes probably for the next few weeks. And then we'll see, obviously, if things open up a little bit more.
Is there any less confusion for these federal employees who got this email from Musk on Saturday, were then told, in some cases, as you shared with us yesterday, Nathan, no, do not worry about replying to this, do not do it. And then yesterday, him coming out and saying now you are being given a second chance. Is there any less confusion than when we spoke to you yesterday?
No, the confusion is still there. And I think that's partly by design. I think Elon Musk will put out these statements on X saying, hey, if you don't respond to this, you could be fired, in order to drive up some anxiety and see if people voluntarily leave. Caroline Levitt said that around 1 million federal workers replied to that email. And there was some great Bloomberg News reporting about this that said that a lot of those federal workers did it just because they didn't want to have a target on their backs. And so even though their agency leadership had said, maybe you don't have to do this, or our guidance says you don't have to do it, they personally don't want to have that target on their back. And so this is one of those situations where, unfortunately, for a lot of the federal government workers who are either listening to this or watching this, that anxiety and that confusion is going to probably continue to play out over the next few months, because President Trump is not going to give clear direction on this until he has to, and right now is not the time.
What recourse do any of these workers have? And I ask this having talked to a Bloomberg colleague who has friends in the government in D.C. and just says, some of them are not leaving, kind of waiting to see what they have to do, because they're this is their job, this is their life, this is their career, this is what supports their family. And I'm just curious, we just talked with Eric Larson about the lawsuits that are out there, but I'm just curious, are most workers, can they even afford to get a lawyer and kind of fight this? What is their recourse? Are they banding together?
I think a lot of these workers are relying on their unions to fight the battles for them. Like you said, they can't afford lawyers, it'd be very expensive to afford a lawyer. But I'll just say, anecdotally, from a personal perspective, I've had friends reach out and say, look, I'm probably going to leave the government. Is there anywhere around the D.C. area that's looking for people of, their expertise? Because, this is very much an uncertain time. And I said yesterday, it reminds me of 2008 in Wall Street, when those bankers didn't realize what the future was going to be like.
Right.
That's what it now feels like here in Washington.
So then how does that reshape the federal government, or have the potential to reshape the federal government? A lot of times people who work in government, they're service oriented. They're not doing it to get wealthy. How do you see it?
So I think there's really two angles here. The first is the efficiency side. I think if you were to give, 100 Americans truth serum, I think 90 plus of them would say, look, the United States government needs to be more efficient. And, by cutting some of the workforce, perhaps you do make that efficiency gains. But the question is, the second part is, are you cutting the wrong people? Or are you cutting people that have valuable expertise? For example, when Elon Musk says we're going to go after probationary employees, that wasn't just employees who just started their job. That was also people who were recently promoted, because then they become probationary. And so it's going to be very much a very difficult position if we get to a situation where the government needs to rehire a lot of folks. A lot of expertise will be gone and probably won't come back.
Yeah, I've heard college recruiting in some cases, just anecdotally, again, that's not happening on campuses, for government jobs. Last question, the Doge tour of the U.S. government, that's going to continue? Other agencies that are going to be targeted?
Yeah, I think all of them will at a certain point. I mean, Department of Defense, Veteran Affairs. The key thing about DOD, though, and Veteran Affairs is that they are the two largest civilian employers of the federal workforce. And as a reminder, 80% of the federal workforce is not in the districts. So as they go through those two agencies, I'm going to be really interested to see, are there potential cuts to Florida or Texas or California that could change the political calculus of where Doge is going?
All right, as we said, Same time, same place tomorrow, Nathan Dean. Nathan, thank you so much. Senior Policy Analyst at Bloomberg Intelligence in our D.C. Bureau. All right, we're going to continue with news out of D.C.
Yeah, this about the war between Russia and Ukraine. Ukraine has agreed with the U.S. on a deal to jointly develop its critical minerals, oil and gas, people familiar with the matter said, and what the White House sees as a first step toward reaching a ceasefire with Russia. We got with us Daniel Flatley, Bloomberg News national security reporter. Daniel, is this indeed the beginning of the end of the war between Russia and Ukraine?
Well, I think that there's still a long way to go before we could say that, but definitely this is a big step forward, and I think both sides are looking at this as kind of like a term sheet or the start of negotiations for how they're going to basically keep the U.S. and the Ukraine on the same side together as they sort of try to negotiate an end to this war. So this is a big step, but we're still very far, I think, from the end of this conflict.
Well, help us understand, when the White House Press Secretary Caroline Leavitt said it at the briefing today, and she said that the president does expect President Zelensky of Ukraine to sign mineral deals. I don't know, you guys are on this day to day. When something happens in the White House press room, does it usually mean it's a significant sign of something to come, especially on something on this level, and especially after a meeting yesterday between President Macron of France and, of course, President Trump?
Yeah, I mean, I think anytime, anytime you hear somebody at the podium at the White House press briefing room talking about something, it's obviously a high priority. The exact status of an agreement of this nature, is not always going to be sort of known throughout the government, although obviously it's a very high priority, so people are going to kind of be thinking about that at the forefront of their minds. But, what we know is that there were drafts that have been exchanged back and forth between the Ukrainians, between the U.S. This has been a high priority for Trump. Obviously, we saw the Treasury Secretary, Scott Bessent, go to Kyiv a couple of weeks ago and deliver this proposal to the Ukrainian President Volodymyr Zelensky. So, this has been 2 or 3 weeks in the offing, and there have been some ups and downs, obviously going back to Trump's Truth post last week calling Zelensky a dictator and an unelected official. So, it hasn't been an easy road, but the fact that we're here now signals that, at least we're making some progress, or the U.S. and Ukraine are making some progress. But again, as I said before, it's still a lot to come on where this actually goes from here.
Yeah, and again, as you mentioned, the deal is certainly in its early stages. We don't know too much about it, but what can you tell us about the actual metals or the commodities that could go to the U.S. as a result of this?
Yeah, it's a great question because this has changed a bit. There was this idea that the U.S. is going to get $500 billion worth of, or rights, I should say, to $500 billion worth of rare minerals, rare earths, critical minerals, whatever you want to call them, that are in Ukraine, and that this was going to be in some way in exchange for all the support that the U.S. has given to the Ukrainian people as they fought off this invasion from Russia. That figure has been subject to change. We're now talking a much lower figure. It's still kind of unknown exactly what it is, but maybe on the order of $90 billion. And of course, one thing to point out is that Ukraine doesn't have rare earths, quote unquote, but it does have titanium, gallium, other important minerals that the U.S. is interested in securing a supply of. Actually, Treasury Secretary Bessent was talking about this earlier today, about how he wants to the U.S. is trying to find these minerals everywhere in the world, trying to secure rights to them. But the problem is 85%, if I have the figure right, of these minerals are still processed in China. So they're also trying to figure out a way to process these outside of China. So this is kind of part of a whole, package of things that the Treasury Secretary and others are looking at. But as far as Ukraine goes, this is really about keeping U.S. support and the interest of President Trump in ending this conflict and keeping Ukraine at the table.
All right, going to leave it there. Great update on what's going on. Daniel, thank you so much. Daniel Flatley, Bloomberg News national security reporter out there in our Washington, D.C. bureau.
Should we even be calling them rare earths?
Yeah,
That's
not all of them are rare.
No, they're not all rare.
Or as valuable.
Hey, let's stay global. The question, what global market has the best macro fundamentals? We've been hammering it quite a bit lately. This is, Carol, how markets outside the U.S. are outperforming markets in the U.S. The MSCI World ex-U.S. Index of Developed Markets up 7.6% so far this year versus a gain of 3% for all developed world markets and a gain of 1.5%
for the S&P 500.
Great context, Tim. Let's find out where our next guest is finding opportunities and what's kind of the macro play here. With us is Paul Eitelman. He is Senior Director and Chief Investment Strategist at Russell Investments North America, joining us right here in studio. Paul, good to have you here with us. How are you?
Yeah, I'm doing great. Thanks for having a West Coaster here today.
We like West Coasters. Tell us, well, first of all, tell us, we are obviously watching all the news that comes out of D.C. on a regular basis, what the Fed says, what Fed speakers say. What is top of mind when you guys are, I don't know, meeting with clients, meeting with investors? What's top of mind for them?
Yeah, I think we're trying to separate fundamentals from policy risk right now. I think the foundation for the U.S. right now looks solid and resilient from a fundamental perspective. Certainly the data's slowed down a little bit, but I know there's been a lot of focus on consumer confidence over the last couple of trading sessions. I think those indicators are honestly a little bit overrated. When I look at the fundamentals for the U.S. consumer, real income growth is still solid and positive. Wealth effects are solid and positive. And layoffs are still low. And so I think for me, that ability to spend is ultimately the most important driver and still suggests the consumer could grow at a sort of 2% plus real pace and support a sustained economic expansion here in the U.S. So that's sort of my starting point. And then policy risk comes in to that. And it's like, oh gosh, there's an awful lot of uncertainty, and it's almost a fire hose of proposals every single day that we're having to grapple with and try to quantify.
What's the biggest policy risk to you? Because somebody listening or watching right now might say to themselves, wait a second, that all sounds well and good, but if you have mass firings by the federal government, we'll see some knock-on effects from that. If we see a crackdown on immigration, we could see some sort of effect on spending and GDP growth from that. What's the policy risk?
Yeah, so I mean, we're looking at the DOGE angle in terms of cutbacks as a risk factor. We're looking at deportations as a risk factor, and we're looking at trade policy as a risk factor. I'd say right now the mass deportations angle has not risen to the top of the barrel in terms of observed risk in the near term. Certainly there's some action there from ICE, but the figures in aggregate are not tracking a run rate that looks like it's massively disruptive onto U.S. fundamentals. So I'd say of heightened risk right now, at least in the short term, is DOGE and trade policy. And I think on the DOGE angle, certainly there's been some cost savings, which incrementally are a headwind onto growth. There's also the risk onto government employment. It seems like by our best calculations here, we're tracking a shortfall on government employment over 2025 of something like 200,000 workers, which is nothing to sneeze at. In the aggregate, that might slow down payrolls growth by something like 20,000 and push the non-farm figures from, call it the mid-hundreds to the low hundreds. And so that's certainly a risk and a headwind. And into a labor market where there's not a lot of private sector hiring right now. So some of those individuals could be displaced for a period of time and face some household distress. And so I think there's certainly a risk there.
What's the DOGE risk?
It's the setback in government workers and then the pullback in government spending. Both of those are, I think, headwinds onto the business cycle. I think they're survivable headwinds because when you think about the impulse for what's happening here, it's quite different from what usually leads into a sort of standard business cycle recession where those layoffs are revealing a fundamental weakness or vulnerability in the private sector. We don't really have that. This is more of a policy choice of the new administration. So I think we can get through it, but there's not a big sample size, to use a technical term, to kind of have high conviction in that view.
Do you think we know that the president loves looking at the markets as a barometer. The stock market more so than the bond market is the sense that I get. Yeah. But do you think we'll start to see pushback? I mean, look, the sell-off that we've had over the last week or so, does the president see that and say, wait a second, I got to reconsider some of my policies here?
I think so, but we don't know for sure, right?
Certainly, and I'm not saying that the sell-off is at all related to the policies. What I'm saying is that he likes to look at it as a barometer.
Yeah, and I think we got some flavor of that, certainly in Trump's first term. He hasn't been quite as vocal about it thus far in 2025, but there was a lot of sensitivity in 2018, 2019 to equity market sell-offs that approached an order of magnitude of, call it, 5% around the trade war escalations with China several years ago. And so I think, like most presidents, you would expect Trump to want to engineer a healthy economy and a healthy market, and I suspect that'll create some sort of resilience or sensitivity to how far he pushes some of these more growth or market negative measures. But we'll have to see.
Tim and I have spent a lot more time this year already talking about markets outside the United States, and that finally, we're seeing some outperformance.
Yeah.
You know, and Tim kind of laid down the numbers as we got into this introduction with you. When you look at global markets, what global developed market do you think has the best macro backdrop? Is it still the United States, or do you see some opportunity outside?
Well, I think there's maybe some green shoots in Europe. It's been a region that investors have not loved for many years now.
Yeah. Been talking about it, promising it for a long time.
But certainly the relative valuations are more attractive there. And when we look at business cycle fundamentals, certainly the starting point is weaker, particularly in countries like Germany. But we're seeing at least some green shoots, particularly out of the European banking sector after the ECB's cut rates here several times now. That bank credit at the increment is starting to pick up. And Europe is a much more traditional banking system driven economy. And so I think that pickup is encouraging that maybe European fundamentals could turn less bad. And that combination of cheap valuations and less bad fundamentals is often a powerful recipe for investors. So I think that's a market that has some potential here. We're trying to be diversified globally, though, in our holdings.
In where are you overweight? Where are you underweight?
Yeah, I think we're pretty balanced right now, just given how intense some of the policy risk and uncertainty are. It's just a lot of those things are hard to have.
Meaning you've
very high
diversified away
conviction.
from the U.S. a little bit?
We're running a sort of balanced, globally diversified portfolios, roughly close to capitalization weights. I'd say across assets, where we're kind of trying to find areas of the market that have better or worse skew right now into a backdrop of extremely tight credit spreads, as we're thinking about allocations in the growth portfolio, exposures to equities in general in sort of a global sense, and exposures to real assets look a little bit more attractive
So like
to us
real
than corporate
estate
credit.
and
Yeah,
things like that?
that's right.
Anything else beyond real estate or?
Infrastructure and equity. Yeah.
And equity. No Bitcoin in there? No digital?
It's not a big focus for us.
I'm just kidding. What is the Trump risk factor overall?
Well, I think it's...
Markets were very enthused coming off of the election, but we've definitely seen a pullback off of that.
I think it's two-sided policy uncertainty. There's good initiatives that could be very supportive for economic growth and earnings growth. The deregulation side, we are seeing some traction there around the CFPB and other factors where they're pushing to sort of dampen the regulatory burden on businesses. I know some people would like that to be faster, but I do think that ball is moving in the right direction and has supported a pretty notable pickup in business confidence, at least ahead of this, call it last week or so. We see that in the CEO confidence numbers that came out from the conference board last week. We see it in a lot of the regional Fed manufacturing surveys that there was this sort of step up in business confidence, and the fundamentals for the corporate sector look pretty solid. Like this fourth quarter earnings season has been pretty darn good, and not just for the mega caps. We're seeing a broadening out in earnings growth that's showing some fundamental resilience here from the corporate sector. So as long as the policy risk doesn't get too intense, I think that setup from the corporate sector should support an ongoing sort of strength from the U.S.
10
economy.
seconds, though. That business confidence more important than some of the weaker consumer confidence numbers that we're seeing, or consumer sentiment, just quickly?
Well, the nice thing about business confidence is we have the fundamentals on earnings and the confidence. I think for the consumer, we have the fundamentals, but we don't have the confidence right now, so a little bit more of a mixed bag there.
Great. Thanks for coming in from the West Coast, Paul Eidelman. He's Senior Director, Chief Investment Strategist at Russell Investment.
You're listening to Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, as we mentioned at the top, stocks down, bonds surging is another disappointing reading on the U.S. consumer fueled concern about the health of the world's largest economy. Well, this morning, Bank of America CEO Brian Moynihan commented on the U.S. economy, specifically on inflation worries and what it means for U.S. rates, Fed policy, when he spoke with Carlyle co-founder and co-chairman David Rubenstein from the Economic Club of Washington.
Inflation is coming down, but is a bigger fight. And in the end of the day, there's the dual mandate, employment, inflation. Employment, they're in great shape on. Inflation, it's been coming down, it's working its way down. It takes multiple years to squeeze inflation out. Our expectation is they won't cut rates. I think we have
for the whole rest of the year.
Yeah, for the rest of the year and into next year, and frankly.
Well, there you have it. Bank of America CEO Brian Moynihan speaking earlier today with Carlyle co-founder and chairman David Rubenstein at the Economic Club of Washington. Check out more of that interview on the David Rubenstein Show, Peer-to-Peer Conversations. That one airs March 12th at 9 p.m. Wall Street time.
All right, so we want to get into it, and with the assessment on the U.S. economy, plus roll in today's U.S. consumer confidence data, we wanted to have a conversation with our own Michael McKee. Mike is Bloomberg News international economics and policy correspondent here at Bloomberg News. I got to say that consumer numbers came across. It's like, hey, Mike, what are you doing at 2:54?
He was sitting close to you.
Please come, please come. First of all, let's talk about that data. How bad is it? We had a guest on who's like, those consumer numbers, I don't know if you should read too much into it.
Well, it's hard to draw a direct connection between the consumer confidence and sentiment numbers and consumer spending. They don't always go hand in hand, and consumers often say they're depressed and they spend anyway. Last time we saw
spend because they are depressed.
That may be shopping
Guilty
therapy.
as charged.
The last time we saw the expectations index this low, which is below 80, the level that the Conference Board says is sort of predictive of a recession, was June of 2024, when President Biden was withdrawing from the ticket and all that was going on. So people were depressed, but they didn't stop spending. So what's going to happen now? That's the issue we have to watch in all these other numbers. Like Friday, we get income and spending numbers. The Conference Board noted that in their comments from the people they surveyed, there was a sharp increase in the mentions of trade and tariffs back to a level unseen since 2019, which was when Trump was putting on the last tariffs. Most notably, comments on the current administration and its policies dominated the responses. So whatever the Trump administration is doing, it's not making people feel better, put it that way. Now, whether they act on that is the open question.
Okay, so that's the perfect segue, because they haven't done anything yet when it comes to trade. We're sort of in this moment where, yes, tariffs have been threatened. They're supposed to start at the beginning of next month and the beginning of April as well. So consumers aren't necessarily seeing that yet. Maybe is it eggs that they're... Is that?
It's definitely one of the things. Egg prices keep going up. Bloomberg had a great story today that we have the fewest laying chickens in 9 years or something like that, because they all got killed by
Makes it tough.
Yeah, and so that's something that's very visible. I think people, because it's become almost a meme, people are focused on eggs, and there are no eggs in the supermarket. But people generally look at food prices like meats and vegetables, fruits and vegetables, because those are the things you're buying constantly, and if the price keeps going up, it bothers you. But right now, people are concerned that tariffs are going to raise the overall inflation level, and we don't have any indication of how much, how fast, whatever, because we don't have the details, as you mentioned, Tim. We're still waiting for those to come down.
We have a guest on, I think, in one of the next 2 hours that is talking about 4 rate cuts for
Louis
this year.
Navellier.
Thank you, Louis Navellier. Brian Moynihan of Bank of America doesn't expect a rate cut this year nor next year. I mean, what has to happen for the Fed to not cut rates at all this year or next year? Is it the inflation worry?
If inflation doesn't come down and the economy holds up, then they would not cut rates. Overnight, the market's priced in a second rate cut this year. So right now in the futures markets, you're looking at 2 rate cuts, one in October, one in December. The futures at this point, this far out, meaningless. They will change constantly as the data keeps coming in and stuff. But it does give you a sense of how the markets are feeling about the prospects for the economy at the moment. Now, obviously, markets change too, but it's also interesting in the Conference Board survey, only 46.8% of consumers, a minority, expected stock prices to increase over the year ahead. That's the smallest share since a year ago, April. So Americans are starting to signal some concern. And the reason you look at that is because recessions are a confidence issue. You lose confidence in your ability to make more money or keep your job or whatever, you stop spending money, and then companies stop hiring and stop producing stuff, and it snowballs from there. So we're not at a point where we have to say a recession's imminent, but it's something to keep an eye on.
All right, a little somber mode. Note is something. We should remind everybody, right? We get a big, important inflation print, just 10 seconds.
Friday, yes,
Friday.
the PCE number.
All right, we're going to leave it on that. Michael McKee, thank you so much. Thanks for hanging around. Michael McKee, International Economics and Policy Correspondent here at Bloomberg News, right here in the studio.
Hey, coming up over the next 2 hours on a Bloomberg Business Week, we stick with the consumer. Abby Roach over at Allspring Global Investments. She's going to stop by, talk a little bit about Home Depot and the consumer bigger picture as well.
All right, the close coming your way on Bloomberg Television. Tim and I continuing right here on Business Week.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. The White House today sought to clear up any confusion over what federal workers are expected to report about their activities. Stacey Lynn reports.
White House Press Secretary Caroline Leavitt called it a very simple task.
Sending 5 bullet points to your direct supervisor or manager, CCing OPM.
There are over 2.4 million federal workers.
We've had more than 1 million workers who have chosen to participate.
That's less than half of the workforce.
There are a lot of Americans without a job, but there may be some openings in New York.
With Elon Musk's Doge slashing jobs, Governor Kathy Hochul has launched an initiative called You're Hired.
The federal government might say you're fired, but here in New York, we say you're hired.
She touts the state's 12 weeks of paid parental leave and how the state is temporarily waiving the civil service exam requirements for many of its job openings.
Whatever your skills, we value public service.
Interested federal workers can find the job listings at ny.gov/WeWantYou. Michael Wallace, CBS News.
On the legal front, a federal judge has given the Trump administration less than 2 days to release billions of dollars in foreign aid. The judge says the administration has given no sign of complying with his nearly 2-week-old court order to do so. House Speaker Mike Johnson hoped to bring a budget bill to the floor today, but there is fierce opposition from Democrats over the deep cuts. Hakeem Jeffries.
Let me be clear. House Democrats will not provide a single vote to this reckless Republican budget. Not one.
Medicaid is the main concern. CBS's Caitlin Huey-Burns spoke to Johnson today.
He's saying we don't want to necessarily touch Medicaid as the program. We want to get these savings by rooting out fraud, waste, and abuse within the program. But the amount of cuts that they are talking about require some pretty heavy cuts across the board.
With the Gaza ceasefire in doubt, Deborah Potter reports Israel is using more military force in the West Bank.
Bulldozers have demolished large areas of the Jenin refugee camp, and the local municipality says military engineers could be seen making preparations for a long-term stay.
The Conference Board said today consumer confidence has declined again. Business reporter Jason Brooks.
Consumers are the most pessimistic about employment prospects in 10 months, while inflation expectations jumped to 6% for the year ahead. The board says inflation and prices continue to dominate write-in responses, and that there was a sharp increase in mentions about tariffs and trade.
On Wall Street, the Dow is currently up more than 200 points. This is CBS News. The NFL will consider a proposed ban on a controversial play, as Steve Kathan reports.
All right, let's talk about the tush push.
Call it the tush push or the brotherly shove. Brotherly shove again. Hurts is in. Touchdown, Philadelphia. The Super Bowl champion Eagles have nearly perfected the short yardage play where teammates push quarterback Jalen Hurts from behind into the end zone or for a first down. The NFL says an unnamed team submitted a proposal to ban the play. Reports say it was the Green Bay Packers. Owners could vote on it as soon as next month. Buffalo coach Sean McDermott has suggested there could be safety concerns with the play, even though the Bills have used a version of it. Steve Kathan, CBS News.
Denny's is the latest restaurant chain to slap a surcharge on eggs. Bird flu continues to cause shortages and drive up prices. The charge will be temporary and will depend on location. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, everybody, we are just under 55 minutes away from the closing bell on this Tuesday, and we've got stocks definitely off their lows of this session, but still down on the NASDAQ 100, really taking the most biggest hit, I should say, on a percentage basis. We'll get into the trade in just a moment. What are you thinking?
We just had a great chat with Mike McKee. If you missed that, then I don't know what to say.
Then, come on, come on.
Then you got to tune in earlier.
Come on, man.
But we talked about the consumer.
Yes, we did.
We got a little read on the consumer today with Home Depot reporting. Stock's up 3% right now. Then we got that data a little later that made the market move lower.
Yeah, the consumer sentiment.
So what is going on with the consumer? Abby Roach over at Allspring Global Investments, she's going to stop by with some of the answers.
Consumer expectations about things. It was all from the conference board, so we'll dig into that too. Also, some news this afternoon. We talked about this last hour. Ukraine has agreed to a U.S. minerals deal. We have a great guest, the CEO at Orion Resource Partners. This is their world, so curious to see what they have. Maybe get really kind of a primer, whatever you want to say.
Whatever you want to call it.
On minerals and rare earth minerals, to be exact.
And a former top American sanctions official, this is totally related, Carol, on how the U.S. uses Wall Street, Silicon Valley, and big oil against America's enemies. Edward Fishman, he's a professor at Columbia. He's joining us on his brand new book. It's out today. Here it is. I'm holding it up. It's called Choke Points.
It's a thick one. I'm just going to put that out there.
Yeah, it is. This is a big one. Many hundreds of pages.
Like 2 inches?
500 pages. Yeah.
All right, everybody, let's get to it. Looking forward to the next 2 hours here on Business Week. First up, though, what?
You can go back and watch the conversation on YouTube.
On what?
That with Mike.
Oh, yeah,
you just got to scrub back a little bit with the browser
there
or whatever it's called.
See, you never miss anything in the digital world.
That's true.
Which is good or bad sometimes. All right, let's get to your market setup with less than an hour to go. Here's Charlie Pellet.
Hi, thank you very much. And here's what's going on. We've got the Dow higher, the S&P, NASDAQ, both declining right now. And another big drop in the NASDAQ 100 has pushed its 4-day loss to around 5%. That is the most since early September. So here's where we stand. We've got the S&P keeping it all in in context, down 14 right now, 59.68 on the S&P, down by 0.2%. Dow Industrials up 215 points on the Dow. That is a gain of 0.5%. NASDAQ down 194 for the NASDAQ Composite Index, a drop right now of 1%. The 10-year 4.29% with the 2-year that's currently yielding 4.09%. Spot gold down $39 the ounce, down 1.3%, 29.12. West Texas Intermediate crude down 2.4% at 69.03 a barrel, and Bitcoin down 6.4%, 87,950 now on Bitcoin. Sharon Bell is senior equity strategist at Goldman Sachs International. She says, no question, tariff talk is also adding to the market uncertainty.
We clearly don't know what Trump will do when it comes to tariff plans. Even for Canada and Mexico, will they restart again? And is the tariffs that he's talking about sort of a negotiation tool or something that he plans to use permanently? So it's a lot of uncertainty. I think that's extremely unhelpful, unhelpful for growth, unhelpful for inflation as well.
Sharon Bell of Goldman Sachs International. So again, recapping, S&P down 14, down 0.2%, as the latest reading on the U.S. consumer proves to be a major choke point for markets. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, he never misses a beat. Good stuff, Charlie. Do appreciate that. If you never want to miss a Bloomberg Business Week story, Carol, become a subscriber today. You'll unlock deep reporting and analysis from reporters around the world, including unlimited access to Business Week. Just check out our offers right now at Bloomberg.com/subscribe now. I mentioned shares at Home Depot, higher by 3.2%. The company expects key sales metric of comp sales to return to higher growth this year. The Home Depot cautioned that housing demand won't change significantly in the near term. Abby Roach is portfolio analyst for the Empiric LT equity team at Allspring Global Investments. The Empiric LT equity team manages about $14 billion across 3 large cap portfolios. Abby joins us from Virginia. Abby, good to talk to you again. You're a consumer stock analyst. We'll talk about Home Depot in just a minute, but overshadowing that is consumer confidence. We saw stocks and bonds fall after we learned that U.S. consumer confidence fell this month by the most since 2021 on concerns about the outlook for the broader economy. It adds to evidence that uncertainty over the Trump administration's policies is weighing on households. Surprising to you? How, in your view, is the consumer doing?
Thank you for having me. I think what I would say, listening through earnings season this far, we've heard really cautious commentary with respect to guidance for this year from the different companies. So I wasn't too surprised to see a bit weaker data this morning, just given, I think, the commentary from management has been a bit more tepid. And I think the consumer we've seen continues to face some pressures. And while I think the key word throughout earnings season thus far has been resiliency, I think we continue to see inflation fatigue facing consumers. And we continue to see just a bit of a tougher environment for a consumer. And while they seem to be holding up well, I think the fatigue persists in terms of the different pressures that the consumer is facing.
Hey, Abby, as you know, not all consumer is the same. And I'm thinking about a last guest that we had, that one of the reasons that maybe the U.S. market continues to potentially move higher is the wealth effect, and maybe how the U.S. economy keeps going because of the wealth effect for those who are invested and have investments potentially in the public market. When it comes to consumer spending, do you think about all consumers as equal? And, in terms of what really is the engine to the U.S. economy?
I do think what we have heard really that wealth effect, the higher income consumer, and we've heard this the last couple of years, and it's been really consistent that higher income consumer has been faring better, facing the different inflation headwinds. And just as a result of the wealth effect, we heard from Home Depot this morning, just appreciation in home values. That consumer is hanging in there better relative to the lower income consumers. But I think what I'd say is what we've heard, the lower income consumer continues to face pressure, but the commentary from different management teams hasn't worsened. And at the start of the year, it seemed to be a bit better in terms of how the lower income consumer has been hanging in there. I'd say in the last month in February, I think the consumer has been a bit more cautious, just watching inflation. But I think both are hanging in there okay, but it really is that higher income consumer that has been driving the consumption.
So if we're not necessarily hearing about it on earnings calls, is there a concern that this turns into a self-fulfilling prophecy? If consumers say to themselves over and over again, hey, I'm hearing about tariffs, I'm concerned about tariffs, we're getting a lot of news about layoffs at the federal level, depending on how they feel about that. Does it turn into a self-fulfilling prophecy?
I think it has the potential for that. I think, watching the consumer data being a bit weaker, I think we're really watching the jobs data closely. That I think if we started to see some weakness in terms of jobs-related economic data, I think then it would point to more concerns. But in terms of it being a self-fulfilling prophecy right now, I think the jobs piece of it is the most important part in watching that.
So let's talk about two names, certainly in the consumer space. Home Depot, as we've been discussing, the stock's up about 3.25%, was up at its highs almost 5% today, but nonetheless, it is moving higher following its earnings. And the company did come out and talk, as Tim mentioned, that key sales metric of comp sales returning to growth this year. Home Depot, walk us through this one in particular, its fundamentals, and what it does also more broadly say about the consumption economy.
It does. I think, the first thing I'll say is expectations were low coming into the quarter, and the results from the quarter were good. They were solid and beat expectations for the most part outside of gross margin. I was really encouraged to see the positive comp result for the company. Prior to this, the last 8 quarters have had negative comp results, and really double clicking into that, the comp transactions were positive this quarter, which was really encouraging after more than 3 years of that being negative. And I think sort of double clicking a step further, even when you back out the benefit that they had from hurricanes, about 65 basis points, they still would have had positive comps there. So encouraged to see the results. And then in terms of the guidance, with the management team not assuming improvement from a housing standpoint, to assume a 1% positive comp is encouraging for us, and we think is a bit conservative if we start to see either some improving in the housing markets, or even just as consumers have continued to be patient around rates. We think at some point there will be some movement in terms of financing related projects. The company did call out a bit sort of from HELOCs and cash out refinancing, seeing a little bit of improvement there. Wow. So we think with a little bit of time there, if we start to see some improvement, that could be meaningful for Home Depot.
Given where rates are and given how many people have rates below 4%, I forget the stats, but we hear it all the time. I'm surprised to hear people taking HELOCs out right now at potentially higher rates.
And there's a little bit of improvement, I think, sort of not from a meaningful standpoint, but starting to see maybe some green shoots in terms of improvement, which is a positive sign.
What about home improvement versus new construction and how that contributes to Home Depot's top line? Which one's more important?
We think both are important, certainly. And I think, the health of the consumer more broadly is certainly important. I think, they called out in sort of some of the different segments they talk about, the pro versus DIY. Both of those segments were positive, which was encouraging. Pro was stronger than DIY. But the company's also made a lot of inroads in terms of improving that pro business, whether it's the Complex Pro initiative that they have or the SRS distribution, but a lot of positive commentary around the pro segment, despite the continued tough environment for the consumer.
Hey, another name that you are looking at is Ulta Beauty, which is down almost 16% so far this year. It will report mid-March after market. The beauty space we watch a lot, whether it's Sephora or Ulta Beauty, which just seems to be, have been on fire. But tell us about Ulta Beauty specifically and what you're watching here.
We think certainly more interesting from a valuation standpoint here. There's been a lot of news in terms of the mass beauty players. Have been some disappointing news that have come out from the mass beauty staples companies that have reported. But the great thing about Ulta is they have exposure to both mass and prestige, which is a higher price point. Gives them a bit of a diversification from that standpoint, in addition to selling across beauty. So we think it gives them a little bit of a benefit there relative to some of the other players in the space, in addition to the company pre-announcing after a strong holiday season in early January. So we think some encouraging green shoots there for them.
What about for the rest of the week and the next week too, when we hear from other consumer-focused companies? What are you watching for?
I think the biggest thing is just hearing sort of the temperature check on the consumer, and especially as it relates to, everyday spend, but also some of the higher dollar spend. And just one data point going back to Home Depot, they did call out the big ticket spend. Those items more than $1,000 were comped positively 1%. So I think really listening to how is the consumer overall, how are they doing in terms of some of those big purchases, and just any indicators around sentiment. And particularly as we get into March with more companies reporting, being able to see how consumers are holding up after some of the challenges earlier in the year, and just getting a temperature check into March.
March 4th, mark your calendars. That's when Target reports results before the bell. We'll, of course, bring those to you as we do get them. A big thank you for joining us, Abby. Do appreciate you taking the time. This is Bloomberg.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go ahead of the closing bell. We are seeing a recovery for the U.S. stock market right now, but the S&P still down 13 points, a drop of 0.2%. Dow Industrials up 243 now, up 0.6%. NASDAQ down 188, a drop there of 1%. The 10-year 4.29%, the 2-year 4.09%. Spot gold down $39 the ounce, down 1.3%. 0.3%. West Texas Intermediate crude down 2.2%, 69.14 a barrel. Bitcoin, a major sell-off today. Bitcoin now down by 6%, 88,258 on Bitcoin. Bank of America CEO Brian Moynihan says overregulation of lenders is the main driver of customers being shut out of the American banking system and not political bias. He made the comment in a wide-ranging interview with our David Rubenstein at the Economic Club of Washington, where he also discussed the outlook for interest rates.
Our team right now is basically says there'll be no further rate cuts through their forecast period, which is this year and next year. And they were one of the first people to pull that off the table. And they did because they said inflation is coming down, but it's a bigger fight. And at the end of the day, there's the dual mandate, employment, they're in great shape on. Inflation, it's been coming down, it's working its way down. It takes multiple years to squeeze inflation out.
Bank of America CEO Brian Moynihan interviewed at the Economic Club of Washington. Tesla's market cap has fallen below $1 trillion. The stock right now down 8.3%. Home Depot, a company we were just talking about after earnings, up 3.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. It is time for another edition of Bloomberg Plugged In, your weekly look at EVs. Today, we're talking about the grid. Jess Mellinson is president and COO at Utilidata. It's a company that uses AI to monitor grid conditions. Jess joins us from New Jersey. Jess, welcome. The company has developed the first distributed AI platform for the electric grid. It's called Carmen. What is the problem that this is solving? My head is not in the grid every single day, so help me out a little bit.
Yeah, sure. So, the grid doesn't have great visibility or tools to manage power flow at the local level. So when you think about electric vehicles, where they plug in is that previously sort of sleepy part of the grid you see around your neighborhood with poles, transformers, wires, often pretty old infrastructure, low data. And so, EVs, when they show up, they can create as much demand as a house or more. But unlike a new house, the utility doesn't know it's there. It behaves less consistently than a house. And so the utility needs new tools down at that low voltage part of the grid to see what's going on. And so that's what Carmen does. We developed it, as you mentioned, in conjunction with NVIDIA. It allows, and the first application is inside of an electric meter. So from that vantage point, the utility then is able to see where the EVs are, understand what they're doing to the infrastructure, and take action to manage them better.
So your biggest customers then are EV companies or what?
No, they're electric utilities first. Okay. So the Carmen module will work with anything that electricity runs through. But we started with the utility sector because they have the widest need for this kind of AI capability. They're managing incredibly complex infrastructure, and they're trying to get ready for sort of unpredictable penetration of electric vehicles. So our first hardware partner for the Carmen module is Hubble. They make all kinds of distribution grid equipment. They're starting with the electric meter. So this year, Hubble will make available an AI meter that gives the utility that kind of visibility and management tools that they previously have not had.
How often does somebody replace an electric meter? Does a utility replace an electric meter? I feel like these things are the type of thing that, these are on for decades.
Yeah, they're supposed to last 15 to 20 years. Okay. And about 15 or 20 years ago, utilities made a big wave of investments in smart meters. And the smart technology back then was that you didn't need a meter reader walking around your neighborhood. You could collect billing data remotely. That was the evolution 20 years ago. Those meters are coming due for replacement. And so what's the technology a utility needs now? What we've said with NVIDIA is they need to think way forward, because if you do the math now, those meters are going to be out there in the mid-2040s. What is grid management going to look like in the mid-2040s? What's EV penetration going to look like at that time scale? Utilities have to think forward to what kind of software and AI capabilities they're going to want running in that meter over the next 20 years.
We recently talked with Zach Dell, son of Michael Dell, who has created a company in terms of batteries and storage and giving it back to the grid and kind of helping to support it. And this is in the state of Texas, but looking to expand. I guess my question is that how does this help already stressed grids, which is something that he is working on? Or, it with stressed grids, what we really need is it something that would really be useful with updated grids, or does it matter?
Yeah, so EVs can stress the grid. You know, they can overload transformers. Right. They can introduce, power quality problems. All of that can either cause a local outage if there's enough of an overload, or at minimum, it's degrading the life of that equipment. So a transformer that's supposed to be out there 30 plus years, it may only last single digit years if it's consistently being overloaded by an electric vehicle. So the first step is utilities need awareness of what's going on with that equipment at the edge. That's what this Carmen platform, one of the first steps is you can just run AI models and understand what's plugging in when, see the electric vehicles, see what they're doing to power quality, see what they're doing to the loading of that transformer. The next step is to manage the utility infrastructure and potentially the charging patterns of the car to reduce that wear and tear on equipment and integrate EVs in a more cost-effective way. So even if you shift charging for a few minutes, that could alleviate a local problem. And so what we're trying to do is provide utilities with the ability to actively manage that infrastructure to keep costs down, to preserve their equipment and keep rates low, much like an internet service provider would manage internet traffic, or we navigate the roadways. That real-time AI information can help get more out of existing infrastructure.
But do the insights actually tell us anything more complicated than what we're already told by our utility, which is, hey, plug this thing in late at night when everybody's asleep so it's ready for you in the morning, and that's when the least stress is on the grid. At least that's what they told my dad to do in California.
Yeah, so that's sort of like the first level of EV management, but that's pretty simplistic. And then take that to its end state, everybody plugs in at 7 p.m. and you've got a new peak to worry about. The other thing, the effects are really localized, and they can be nuanced. We deployed Carmen with the University of Michigan to study sub-second impacts on the grid, and they saw a lot of issues: quick drops in voltage, power quality problems, strange behavior from the charging software in the vehicle. All that is not recorded if you're just looking at a data point every 15 minutes or hour. So the utilities need to get more granular with that visibility, and then they need to figure out how to do local management so that we can really smooth this out, because what the charging profile that is best for the grid can certainly change from different times of day and even different neighborhoods. And so eventually, when we get to millions and millions of EVs on the road, utilities are going to need more active management tools.
Do you think we get to millions and millions of EVs on the road? There's some serious concern. Look at what Ford has done with its pullback. GM as well. Tesla sales down for the first time. Tesla sales growth down for the first time this year. We saw what happened outside of the U.S. We've been reporting on that, and that's why Tesla shares are down. The Trump administration is not pushing EVs. Do we get to that point?
Yeah, I think we do. I mean, obviously, there's a short-term impact of new federal policies. There, in the states we operate in, there are strong state policies. But more important than that, the vehicles themselves, from a cost competitiveness standpoint and a feature and quality standpoint, have really gotten very competitive. And so, we're not going to tell you what the EV penetration rate is next year or in 5 years. But again, when utilities making investment choices that are going to last till the 2040s, they have to be ready for millions of electric vehicles and a pretty wide range of outcomes of where those vehicles show up, how much they use, and how they might behave.
Jess, are you more worried, though, about data centers and the like in terms of stress on the grid? Tim and I have spent a lot of time talking a lot for a while, I feel like, but especially this year, about data center needs, energy, the grid, the role of nuclear power in helping to meet that demand. We've been really kind of doing some deep dives into all of this. So I'm wondering if the bigger stress point in terms of understanding power flows are things like data centers versus EV ramp up.
Yeah, I mean, data centers by the numbers are a bigger demand draw than EVs in sort of near-term expected growth, but they're very different in nature. Data centers are a very large source of demand centralized in one place. They have to work with to interconnect. They have to worry about the availability of generation. EVs are, again, at that low voltage level, coming online locally, sporadically, driven by customers without utility visibility. So yes, in the big picture, demand is going up. We've gone from decades of 1% or sub 1% load growth to 3% year over year, which compounds really quickly. In the big picture, obviously a great thing for utilities. They've got to manage all this. Data centers are a huge issue. Carmen also can benefit that type of application. EVs are also a very big issue. Again, both are positives. The utility industry is excited to serve this new demand, but they just need to invest in the right technology to get ready for it.
So what's the opportunity then for your company? Is it making sure that every single utility around the U.S. buys the smart technology for when it does go and replace those monitors?
The meters, yeah. For utility data, we have a very close partnership with NVIDIA. NVIDIA is an investor in our company. We've been experts in the electric grid for over a decade and how to use real-time data to solve problems. Obviously, NVIDIA makes incredibly scalable, accelerated computing platforms. We combine that expertise to develop a product for the electric industry. The idea being utilities need to software define their infrastructure. They need to be able to run AI models at the source of the data. That is quicker, faster, it's more resilient, saves utilities cost, and you get better performing AI when you can, again, think about navigating in your car, right? You have a powerful computer on your car and in your phone that's helping in conjunction with the cloud execute some AI use cases. And so what we've been trying to do is bring products to the utility sector that enable them to run their infrastructure in a similar manner. And part of the point of the Carmen platform is that every utility hardware company doesn't need to learn how to do this or invent their own platform. They can just all embed an NVIDIA-based module and create real benefits for the grid overall.
Hey, Jess, just got about 30 seconds here. What's your guys' plan in terms of your own company? I mean,
NVIDIA's going to want to see a return.
Are you profitable? Is the plan to stay private? And again, just quickly, just got about 30 seconds.
Yeah, we're a private company, and we're really focused on making our initial utility customers like Consumers Energy in Michigan, Portland General in Oregon, successful with this technology to demonstrate to anybody replacing a meter or investing in grid hardware that this is the platform to adopt.
So no plans to go public, at least not anytime soon.
Not that we're announcing today. No.
Tomorrow?
We'll let you know.
Okay, sounds good. Deal. Jess, good to get some time with you. Thank you so much. Jess Melanson, he is President and Chief Operating Officer of Utilidata. It is a company that uses AI to monitor grid conditions. We've been talking a lot about the grid and energy and power, haven't we?
Yeah, it's remains to be seen if we can shore up the grid in all the states where the grid has been under pressure over the last few years.
A lot of times because of climate change, hot or cold.
Yeah, good point.
Direction. Don't go anywhere, folks. Counting you down to the close. We're soon going to get there.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow Jones Industrial Average holding on to a gain of 0.3%. NASDAQ and the S&P 500 index both remain in the red. S&P right now down 27 and 59.56. That is a drop of 0.4%. Dow Industrials up 140, up 0.3. NASDAQ down 233, lower by 1.2%. Stocks got hit. Bonds surged as another disappointing reading on the U.S. consumer fueled concern about the health of the U.S. economy. 10-year, 4.28%. The 2-year, 4.09%. Gold down $40 the ounce, down 1.4%. Spot gold now at $29.11. West Texas Intermediate crude back below 70 at 69.03, down 2.4%. And a major slide today for Bitcoin, down 5.9%. Bitcoin at 88,415. Apple shares up today by 0.1%. Apple investors rejected an outside shareholder proposal to end the iPhone maker's diversity, equity, and inclusion efforts, though CEO Tim Cook said the company may make some adjustments to the program. Again, recapping, the S&P with 19 minutes to go ahead of the close, down 0.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just under 18 minutes to go until we wrap up this trading day on this Tuesday, February 25th. Carol Master, Tim Stanovic live in our Bloomberg Interactive Broker Studio. Great to have back with us as we drive to the close. Louis Navalier, he's chairman, founder, and chief investment officer at Navalier.
He's driving to the close.
He is.
Fortunately, he pulled over, so he's not driving to the close, literally.
I find it funny.
He's not in Florida this time.
No,
Louis, you're out there in California. What are you doing in California?
I'm at Donner Summit. I was driving back from a meeting in Scotts Valley, California.
Amazing. Donner Summit. So a little bit of snow there this time of year.
Yeah, only about 9 feet. Yeah.
Okay. All right, so
we won't go into a whole history of Donner Pass.
You are literally driving to the close, which we kind of love. Louis, by the way, also author of The Sacred Truths of Investing, Finding Growth Stocks That Will Make You Rich. All right, so Louis, first of all, this market environment, I don't know, there's a lot of things that keep coming at investors, whether it's economic news out of D.C. Do you feel like we are setting up for maybe some kind of correction at some point that just, that investors are getting more and more nervous? What are you seeing in your day job?
I just think it's normal consolidation towards the end of earnings season. Obviously, Supermicro has to release their financials today, and then NVIDIA has to have semi-good guidance tomorrow. And then I think a lot of us will regroup. But bond yields keep meandering lower, and that's going to set the foundation for a nice rally. Also, I've noticed we're rotating more. Things like Eli Lilly are still rallying impressively. So that's a good sign. Something like that's market that got hit with profit taking. That should take off too.
Hey, Louis, we're having a little trouble with your connection. I'm going to talk a little bit while they work to get your connection a little better. We did hear earlier from Bank of America CEO Brian Moynihan, Carol, who talked about the fact that his analysts don't see rate cuts happening this year. And you remind me, he said next year as well.
Which I thought was kind of interesting. We talked about it with our own Michael McKee and the amount of visibility. I think, kudos in terms of laying it out that way. I think he says in terms of the Fed mandate, inflation is a little bit trickier. Our Mike McKee saying in order for that to happen, the Fed's got to make sure that, certainly growth continues in the United States. And this is where, if growth starts to come undone, and God forbid, that we kind of have growth coming undone and still we have inflationary pressures, we're talking about a really difficult environment. And so we will have to wait and see. Mike did remind us that we did see markets starting to price in now 2 rate cuts here in 2025, which we know it really is very sensitive based on what is coming out in terms of economic news. And again, what's coming out in terms of tariff policy or tax policy or business policy, regulatory policy, all of these things will come into play about maybe ultimately what happens to growth, inflation, and what the Fed will do.
I want to get back to Louis Navalier. He joins us back on the phone from California. Louis, I mentioned the Fed rate cuts or lack thereof, at least thus far, because you actually argue that we could see as many as 4 rate cuts this year. Why do you think that?
Well, because the European Central Bank and the Bank of England probably have another 4 to 5 rate cuts coming. They're in recession over there. They're getting increasingly economically desperate. We'll see if Mr. Merz will do the right thing for Germany. I suspect he may not. They really have to turn the nuclear power plants back on, otherwise they're going to continue to lose their manufacturing base. So those global rate cuts will put downward pressure on our treasuries, and then our Fed will be forced to follow treasury yields lower.
Where do you want to put money right now in this environment?
Oh, anything that earns money. I mean,
okay, nice, very nice. Could you be more specific?
Well, like that Sprouts Farmers Market. I mean, that's got very strong sales earnings growth. I own the egg companies that are profiting from egg inflation. Calmine and Vital Farms.
Wow.
We're picking up some biotechs that are earning money, which is good. I still have lots of the data center companies building out the grid and going to help build out the data centers. Those stocks actually got hit harder than the NVIDIAs and things during the DeepSeek news, but DeepSeek keeps crashing, so that seems to have been a false narrative. So. The AI story is alive and well, and it will continue.
Yeah, so you're bullish on NVIDIA tomorrow.
Oh, it has to go higher. It's my largest holding. It's like 20% of some of my accounts, and we won't sell it because we're too cheap to pay the taxes.
When would you sell it?
Well, I'm on record that we probably should hold to the end of the decade. I don't think anybody can compete with NVIDIA on those chips. And then what will happen at the end of the decade, it's hard to make the chips faster because you're approaching the atomic level. So they have to switch to cloud computing. And NVIDIA, of course, has a quantum cloud simulator now. They're working with Google to make the transition. But as Jensen has pointed out, only they and Google are probably going to make money.
Well, Lou, when did you get into NVIDIA?
This is my second time, but I was in a long time ago when it was just mostly graphics chips, energy efficient chips. And then I got in it again about 5 years ago.
Wow, it's had quite a run over the last 5 years. So, yeah, I can understand some hesitancy to sell on a, dip as we're seeing right now.
Well, and Tim went there, and I'm going to go there because I know sometimes, people get ticked off when we're like, are you buying the dip? But are you?
You should buy the dip in NVIDIA anytime you get a dip.
Just NVIDIA, though? Yeah.
Well, NVIDIA is a monopoly. That's a little easier. But right now, I would say... Sprouts Farmers Market is a very good buy in any dip. I think Walmart's a good buy in any dip. Costco's going to announce after NVIDIA, phenomenal buy in any dip. A lot of these stores, the Walmarts, the Costco's are going more and more upscale. Mm-hmm. In Walmart's case, they're also selling a lot more groceries, to more mid-income, upper-income people. But you just go to any Costco, it's just wealthy people buying a lot of stuff and loading up the SUVs.
Hey, listen, just last thoughts. I know we've touched upon this in the past. Just got about 30 seconds here, Louis. In terms of stuff that comes out of D.C., do you just, what do you wait until something's real policy, something having a real impact? Or do you ignore most of what comes out of D.C.? Just quickly.
I'm ignoring most of it. I think the tariffs aren't going to be that inflationary because, it's let's make a deal with Trump. And then we have a very strong dollar that's going to keep imported prices down. But I'm mostly watching how he gets along with the international guys. So I think the Macron meeting was very interesting yesterday. I think the Kerr-Steimer meeting Thursday is going to be even more tense. Those two don't get along, and our special relationship with Britain may be over.
Wow.
Interesting times. Louis, thanks for pulling over and spending some time with us. Louis Navalier, he's chairman, founder, and CIO at Navalier and Associates, joining us there from the West Coast. Folks, we are about 10 minutes away from the closing bell on this Tuesday afternoon. Definitely off our lows of the session. Some earnings to come. We're also going to be watching Super Micro. They're due to give an update. This is Bloomberg.
Listening to Bloomberg Business Week with Carol Nasser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, TikTok, just about 7 minutes to go until we wrap up the trade on this Tuesday afternoon. We've got a slew of earnings coming your way. Lucid, Intuit, Caesars, Workday, Instacart, First Solar, Grocery Outlet.
Kava?
Kava.
That's another
AMC
one.
Entertainment, I saved it too.
Okay, cool.
A few more to come. I know we're all just kind of waiting for NVIDIA tomorrow after the close, but there's few others, and it gives us some great insight into different pockets of the U.S. economy.
I think Charlie Pellet hit this headline earlier, but it's among the most read stories on the Bloomberg terminal. We got to talk about what happened in Chicago.
You know, when
a
Charlie
little earlier
sends,
today.
you have been obsessed.
I have been. A Southwest Airlines plane narrowly avoided a possible collision with a smaller business jet on the runway of Chicago Midway International Airport this morning. It adds to a series of near misses and fatal crashes in recent weeks. The crew of Southwest Airlines Flight 2504 performed a so-called go-around to avoid the business jet, which had entered the runway without authorization, the FAA said in a statement. The FAA and the NTSB each said